Good morning. It's 8 o'clock Central Standard Time. It's a 21C, which is, I don't know, about 70F, I guess. Yeah, welcome to Risk Neutral Trading. This is my, it's my online virtual trading journal. The idea here is that everything I see is captured on my screens with the video, and then my voiceover provides insight as to what I'm thinking. This prevents me from having to, keep up a journal throughout the day by focusing on screen snaps and typing and stuff, and this way I can just focus on trading and the market. I like it, so that's the point. It also provides complete transparency because I have a very, very serious commitment to take no trades off of the stream. And so there we go. This is not for financial or trade advice. There's a disclaimer in the description. I'm not monetized in any way. So, likes and subs is great. And by all means, put something in the chat and, where are you? What part of the world are you living in? What you think about what's going on in the markets, and some dialogue. Trading's a lonely business, so there we go. I share everything live here, and the reason I stream it to YouTube, by the way, is so that it adds to the transparency and the accountability. But I can review the stream from any device, so that's a big help for me. I have standing desks here in my office only, 2 of them in an L. And so after, standing here for 10, 11 hours a day, it's nice to not have to do that if I want to review the stream. All right, let's get on with the reports, which is the usual sequence here. So here's our economic calendar for today. This is investing.com, which I prefer the format here for screen snapping and just reading the basic lineouts. We had the S&P Composite, HIP this morning. We are going to have the consumer confidence number out at 9. That should be a big one. And home sales is, I don't know, didn't get it yesterday. Let's see what happens. Huge earnings, sock up in the middle of earnings season. I'm sorry. We've still got a lot of general banks and credit card companies. Wednesday's really big with Microsoft, Google, Alphabet, A&C, Cat. So, more earnings are on. Be careful about that. Now, investing.com can be filtered to your time zone, your country, what reports you want or don't want, many things. You see the pop that we had here on that S&P number. And the second... This is free, by the way. All the news sources that I have and things are free. I figured that's the best way to start. And if you have, deep pockets and want to pay for this stuff, you certainly can. This is Financial Juice, which is a newer system or service that I use. It's got a similar docket right here. I don't really like it all that much. But it has more of a live squawk box feel on the right column, which I do use. And it was just, you can scroll back and go through all the stuff that's been going on for the day. Crazy comments and things. Here's our consumer confidence at 9, and the case Shiller's at 8, which we already had. And then we've got random risk moving through Asia. So, there you are. Also free. So let's get on to the pre-market now. Well, I'm almost shocked to say this, but we're going to be in a third gap in a row. It's like, you're watching somebody that's just having a ODing on some drug or another, and you wonder how much crazier they can get. Well, this is kind of what it reminds me of. It's incredible. Look at this. Look at this big thing bump here now. Obviously, everybody's all focused on the big news of the entire week, which is going to be, which is tomorrow. And let's get back to a real news source here, and let's look at that. Let's look at tomorrow. Right here, FOMC statement, interest rate decision, and the FOMC conference. Tomorrow at 1 o'clock. It's the biggest news, real news in a month. Trump has been all morning insulting and, calling Powell names. I don't know why he thinks that's necessary or good. I don't get it, but he does. For some reason, that's the way he operates. And the funny part about it is, I don't know whether you know this or not, Jerome Powell was appointed to the Federal Reserve chair by Donald Trump in Donald Trump's first term. Jerome Powell is a lifelong Republican. It's the weirdest thing to me. I don't get the dynamic. But anyway, nobody asked my opinion. So back at the pre-market, here we are with another gap opening. You see the overnight, very low volume, very light trade. Here's yesterday's RTH, same story until the close. Nothing until the close. This is the ES mini, the NQ mini, and this is my high time frame micro composite chart. It is an RTH session only. And these are daily candles. Wherever the price overlaps, I draw a volume profile around them. And that's how we get these high and low volume nodes, which are the red and green lines here that push to bookmap. And also the micro composite VPOC, etc. So here was Thursday, Friday, Thursday, Friday, Monday, and now Tuesday is going to be up here. Unbelievable. Google the term island top and see what you come up with. And this is the market profile. Okay? These are the session prices, which automatically push to bookmap also. Let's get to bookmap. So here we are. This is the bookmap dome or order book or price ladder or whatever you want to call it. Dome meaning depth of market. And that's just what it is. These are the price levels, and that's all the resting liquidity on both sides of the market. This is, once again, another, Jesus. I'm tired of doing it. I've gotten to the point where I don't even do these anymore. I just shift them up and down, Where the hell did it even go? All-time high. ETH, well, we'll put that up here today. They just keep jumping over the top of each other. It's just stupidity. There's no reason that the market is doing what it's doing. So for that reason, that worries me. And change this date here to... We didn't get this out. That was the CPI, and now we're going to be on the consumer confidence. Let's see what that does. And this is whatever day this is, the 28th, huh? Jesus, incredible. All right, so we have a new all-time high in the ETH. These guys will obviously leapfrog over it because they can't stand that. Oh, there we go. This is the full, these are the high and low volume nodes, which trust me are down there someplace. Maybe we can see one. I don't know. So far below us now with these gaps. Here we go. And this is the full session volume profile, which started plotting at 1700 last night and will continue through 1600 today. RTH volume profile, which will start this morning, reset at 8:30. And this is my important column, which is a notes column. And you see higher out of range. I don't even have to change it anymore. 3 days in a row now, we've been gap up. And this is the market session prices, which are pushed automatically from Bookmap to Bookmap from IRT. You notice now that we don't have any indicators on Bookmap or IRT. There are only just a few lines, and everything I do is just common sense, straightforward data and probabilities. Period. There is a POC for both full session and RTH session, which the full session POC is a more muted yellow here, a brighter yellow for the RTH. There's a RTH or Globex VWAP. There's an RTH VWAP, and there's an RTH mid. Also, we have an initial balance high, which is confusing to some people for whatever reason, and that is just the high. But the initial balance high and low simply mark the high and low of the first 1 hour of the RTH trading session. The initials are an acronym for initial balance from the old market profile days. Nothing's mysterious here. And then price, that's all there's to it. The POCs also are just real easy. They just mark the price at which the most contracts have traded so far in the session. That's all. So far, we've traded 4,829 contracts in the overnight. That's why that price is right there. The minute somebody else is 4,830, it's going to be there. That's all there's to it. So now let's look at get on to the statistics and whatnot. So we're going to clear now the column because we do that every morning. I don't have to change the title of the column, which I do every day, to the correct open type, but we're going to open higher out of range once again. And all you do to change the title is just click configure title and column and put that in. The reason I changed the title is so I can have an instant understanding of what was going on in the pre-market by when I'm looking at a snap or the stream. Okay, statistics. That's a pretty important one, I think. Let's look at that next. Where did the statistics come from? This study right here in IRT, and it's real simple. First of all, IRT conveniently highlights the correct open type, and this was the open type from yesterday. It will be again today. And I should get back to how do we determine the open type? Well, if we opened right here, right now, where would this open compare to the previous close? Higher. Where would this open compare to the previous range? Well, here's the previous RTH high, so it's out of range. Higher, out of range. That's all there is to it. There's only 4 open types: gap up, gap down, and 2 in the middle. Easy. The way the study works, or this process works, the system looks back at 2,000 trading days. Of those 2,000 trading days, we opened higher out of range 514. Of the days where we opened higher out of range, the overnight volume point of control was revisited 80.5% of the time. And that's all there is to it. Now I'm just going to go down the list. The next one is the overnight high at 76.3. Overnight high. 76.3, and these are the same. They change day to day, but not much, because we have a large enough data sample to be statistically significant. Come on now, what are you doing here? Delete. I want to delete that. I want to delete that. Put this in here. Put this in here right now. 76.3. it's a large enough data set to be statistically significant. So there we are. And I can't get these aligned just right. I don't know, but there we go. The next order of business is what? The previous high, 65 point something, 0.8 previous high. And yeah, these are not hard, fast targets. They are statistics, probabilities. Remember that. IB high 65.0. Why do I put those initials on that particular one? Well, because the minute we open up here somewhere, I assume, this line, this level, this marker is going to jump to the top of that profile, that highest price. And the IB low is going to go to the lowest price of the first 1 hour. And it will continue to move. As price goes up, the IB high goes up. As price comes down, the IB low goes down. That's it. Real easy. Again, straightforward. Overnight mid is 65.0, and that's somewhere down around here somewhere, one of these. Right there. IB low, I'm not even going to worry about it so far below us. I'm not going to scroll back to it. The previous close is 47.7. That's probably something to do. And these are, you know, it's kind of a moot point in this ridiculous. These ridiculous times. 35.0 is the overnight, is the IB low, overnight low. Sorry. Yesterday was a gap and go. You know, we opened and took off to the upside and never looked back. What else we have here? That ought to be enough statistics to keep me. Now, notice that the IB high and some of these are dynamic levels, right? So they are moving. Well, damn. They're moving because it's a live market. There we go. Some of them will not. The previous high is never going to go anyplace. Neither is the previous IB high or the close or any of those. But some of these will definitely move. So let's move on here to what time do we have? 18. Okay. Craziness. Really crazy. This is just unbelievably stupid, but anyway. So let's see. I hope everything's working right. I'm streaming, apparently. I am got my mic off mute, so that's a good thing. Kind of on my left foot this morning here. Or my back foot, or whatever you want to call it. Right now I'm doing my TLab snap, which I do every morning. What is the TLab? Well, it is a bookmap Discord chat room started by a guy named it is a bookmap Discord chat room started by a guy named Tom B, who is a, professional trader of 46 years. He doesn't trade live and he doesn't call trades. And it is a Discord room. I believe he doesn't, post his account or do any of that stuff, but I believe what he says is the truth. I believe that he is a professional trader and started in the 80s. I'm sure you're never going to see a wrapped Lambo or a bunch of gold chains. So I found it interesting and kind of a reasonably good group of people when I was first back over here some years ago. So in support, I make a couple of screen snaps in there every day, one of which is this one. Usually I do the reports early in the morning about 6, and then I do this one about 8:20, which is just to give people in there that don't have the proper or a similar charting capabilities, all the numbers that they might need for the day and, whatever they're doing. Just kind of a nod of support for Tom and that. I don't recommend any of the other Bookmap Discord sites because I haven't been to them. I went to 2 others for about a minute and a half, and the second word out of the guy's mouth was trying to sell you something. One of the things that's appealing about the TLab is you never solicited for anything. So I think that's pretty cool in this day and age. It's like here, Hey, Antonio, bon dia, tudo bem? Boy, I wish we'd have a gap, huh? Freaking ridiculous. Just in the pre-market here, look at this mess. Thursday, Friday, Monday, and now we're going to be up here at Tuesday. Unbelievable. And yeah, here we are. So one thing I want to be sure of is that I have 678025. That is the most recent micro composite VPOC, and I wanted to be sure it was on my micro composite chart here on Bookmap. And you'll see that I'm sure that it is because I won't redraw a new volume profile until we get overlapping price. Well, that's a hell of a long way from overlapping price, isn't it? There you have it. Now, when you look at these are the gaps, right? Because this is the RTH session. When you look at the full session, I hope everybody realizes they're not gaps. We trade from the RTH. Here's maybe a better way to look at it. Here's the RTH. And here's the ETH trade. Well, when we open, the RTH will be here and the ETH is going to be up here. That's where the gaps come in. But it's not. There is trade through the overnight. So I hope that's clear. And I'm trying to keep these up. We have gaps just falling behind us right, left, and center. We got another gap. This will now be a gap. I shouldn't be taking time to do this, but I want to do it now. This will be the gap low. Gap low from whatever the hell yesterday was. The way I work gaps are the open to the previous high. So I do essentially range. Okay, another thing that's pretty important to do while we're here is be able to trade. I think you'll agree with that. And the way you trade with Bookmap is to activate the trade control panel by clicking that padlock, selecting a method you will use to interact with the application and trade with your mouse, chart, dome, or both. If you choose chart, the only place you can trade with your mouse is in this active data column. If you choose dome, the only place are the two here, the dome columns, and both is, as you might guess, both of them. You can always trade with your hotkeys on your keyboard after you set it up, but a word to the wise there, because that's how I've traded for a long time, and I'm now converted to the mouse, because if you don't have the computer focus on the application, the keyboard doesn't work, and that is a normal behavior of all computers and applications. Got nothing. It's not a bug or anything to do with anything. iOS, Mac, fruit stuff, whatever, it's all the same. You got to have the focus of the computer. It only makes sense, right? If you're looking at somewhere else with your mouse and the focus of the computer, it's not going to work. So there you go. Next thing I need to do is implement the multi-brackets, which is how I what I use to trade, and this is where what introduces the risk-neutral methodology. This is a risk-neutral 2-lot, which is the smallest package size you can use for the risk-neutral theory or methodology or trade management or whatever you call it, because you need to use an even number of contracts. So here is this package size. Then you select a stop loss for the package in ticks on this application, and I choose 12. The first criteria that you need to assess to set your stop loss and the whole trading for the day is your account risk parameters. If you know that the setup you're trading has a possibility of 5 consecutive losers in a row, which is random distribution and perfectly normal, and you're taking 2 lots on the E-mini and you are going for 12 ticks, 5 stops is 300 times 5. Does your account criteria, does the percentage of your account drawdown, is that okay? You know, that'd be $1,500. Next thing you need to know or assess, and this is in my opinion, remember, is the volatility of the market, the instrument you're trading, the price, all those things. Once you've established this package size and the initial stop, the first risk neutral target is automatic. It's for half of the stops, half of the package size, in other words, 1 lot, and it's for the same number of ticks positively as the stop is negative. Then you have a runner. You can do 4-lot high volatility, 24 ticks, 4-lot normal, 12, 24, 48. These are just how I set them up. It's, 100% up to you. And do the math, do the homework, work this out away from the live trading session. You should be ready to trade. You don't go hunting and then rummage around the truck looking for bullets and a gun. You know what I'm saying? You are ready, prepared. You've thought of this the night before. You've analyzed what's the maximum risk loss you can take with random occurrence based on your back test. You've assessed the volatility of the market, on and on and on. Anyway, enough of that crap. Now, one more thing to do here for me is notice that I use multi-brackets, so I don't need any of the tools in the trade control panel anymore. You'll notice that up here I have all of these metrics, which are the same as these. Got to add one more there that I don't have. Anyway, same as these. So what I do is I confirm the package size. I click the button again. Now I get the real estate back. I'm set up to trade. I have all my metrics up here, and I have cancel and close. So now we're ready to rock, and it's 8:28. It's going to be another frickin' gap up. I'm sure I've never seen that, or while I've been watching the market, and I've been doing it a long time, I've got to have, but it's just on nothing. It's like watching a bunch of people sniff glue or something. I swear to God, it's crazy. And I don't understand, all morning Trump has been on whatever he's using over there in Asia to tweet, I guess, so Trump Social, I guess is what it is, to badmouth and insult Jay Powell. I don't know what the point is. The market has gotten the rate cuts that the Fed said they were going to do about a year ago. Tomorrow they're fully expecting the rate cut. I'm not sure what the point of that is, to be honest with you. Just out of curiosity. I'm just talking here. I don't know, I don't get it. An incompetent fool and on and on and on. And the funniest thing for me about it is Jay Powell is a lifelong Republican and was appointed to the chair position of the Federal Reserve by Donald Trump in his first term. I don't get it, but anyway, yeah, there you go. And this new bunch of fellows that we have are, I'm not sure, as up to the job, but we'll see what happens. There we go. We've opened. bing, bang, boom. There's a little, it's a little early because my computer doesn't seem to be able to tell time anymore, or this application, but here we are. We'll get the follow on with the, I'm assuming we will, with the POC here pretty quick. We've opened almost at the top of the, right up at the high. Didn't quite tick that one out yet, but we will pretty quick. And I don't see the POC coming up here anyplace. I guess that'll have to be it right there. So I'll start tagging in my first, my micro composites, and in a little bit I'll put in the blue boy there, and then we won't have to worry about those flags. Now I'm going to change the charting from full session to RTH, and I do that it's pretty difficult. You do that. So far, light volume, we got a little lag, the recalculate and everything, got all our settlements in. Okay. And here's our gap up. Gap up, gap up, gap up. Now, I'm getting tired of talking about this, probably as much as you are hearing it, but we are in gap rules. Surprise, surprise. Get through with this. Switching these charts. This is the mini micros, by the way. I chart the same layout of the micros. Get rid of those naked volume points of control. Set this to boom, boom, boom. Full session only. Save all. Get back to where we belong. Okay, there we go. I'd say we're about on volume for the morning, and every time I say that, I make a mistake, so let's check. Light. We were really light last night. And we've now jumped up for only 1.5 points for the ATR. Yesterday was terrible. I was at like 60% volume. That's why they can do these gaps and crap. It's so much easier to push the market around for the higher time frame. Okay, so we're plotting the IB high. Wow, what a coincidence. It's exactly where it's supposed to be. It's marking the high and the low of the first 1 hour of trade. Nothing more mysterious than that. And here are our two POCs. We have the bright yellow, which is the RTH right there, and we have the more muted yellow, which is the full session. Now I'm going to put my secret indicator here that you have to promise you look away. Don't if you haven't paid for it. It's the vertical line. Ooh, blue boy. There we go. What this is all about is a new idea. Recently, I guess, a month or so now. I used to flag the VPOC religiously because I wanted to know where that point of control had been through the daily session, and I want to have as much trade data as I feel necessary to interact with the market here on the hard right edge. These yellow lines continue to plot all day. They are simply, remember, the definition of the POC is just the price at which the most contracts have traded so far in the session. That's all there is to it. Now, my new plan involves my sidekick Blue Boy here. And what I do now is make sure I can glance left and see the blue line, meaning that I have the entire daily or session in view. And that's the way I want to have it, to have a firm understanding or perception of context so far in the session. Then when I anticipate that I'm going to interact with the market and trade, I can zoom in as much as I want. But this has worked out very well, and you can see that I have them all from a long time. I mean, every session, right? Let's get back to there's the beginning of the ETH. There's the RTH yesterday. There was our close. Here we are. There we go, right? Simple. And it's, like I said, it's a really top secret deal there. So be careful. Okay. Here we go. We're going to close the gap. Who the hell knows? Gap rules. I didn't finish that, I don't think, did I? Probably not. Where am I here? I'll change this. The kid still had, the fella still hasn't updated that OBS plugin, and so I'm still struggling with this. Bear with me. But yeah, the gap rules are real simple. Let's look at over here. If we open in a gap, which we did, and if we close the gap relatively early in the session, and then are accepted within the previous price, and more importantly, accepted within previous value area, high probability that we'll trade across the value area from the previous value area. If we don't close that gap, or if we are not accepted in price, as was the case yesterday, look at there. What did we do? Well, we waffled around all day and then we took off. Can be referred to as a gap and go. Those are the gap rules. And it's old market profile stuff, right? Just like so many of the things that have carried over now. Based on common sense, based on data, based on probabilities, here you go. Now, notice this. Notice the IB low indicator line is below the IB low flag. That's not a bug or a problem. It's known behavior within Bookmap, and it's real simple. The data that drives both the flag and the line comes from IRT real time. Same data. However, the smallest refresh time I can set manually in the cloud node column is 1 minute. And whoever the boys and girls that coded this line indicator, which you buy from Bookmap, coded it less. Now you notice they're caught up. So at first that threw me for a loop, and I didn't want that to be confusing to anybody. And there we go. We got within a point of closing the gap. Let's see what happens here. Ooh, we got an A, B, C, reversal maybe. Who knows? Is that something or another? I don't know. I'm going to close the gap, I'd guess. That would be a miracle. I mean, one of these days what's going to happen is this mess is going to fall out of bed. You heard of Humpty Dumpty and all that thing? Well, why is this happening? Is there any reason on the face of the planet that this S&P is that high? No. One interesting rule, however, or not rule, but statistic or fact or whatever. Over the last 8 or 9 times that the government has shut down over this, childish budget excuse, which is just political, whatever. The S&P has traded up and to the right each and every time. Never has it ever traded lower, pulled, lost ground. So it's not, I guess it's to be expected that, or the data would suggest that you should plan on higher prices. This consecutive series of gaps is kind of goofy, but as I said earlier, those gaps are kind of deceiving because they are based on the overnight trade. That's where we get from the previous close to where we open is the overnight trade. So those are, our fellow traders in Asia and, Europe are having their way with it too. Well, let me see. We just closed the gap. And where'd the open go? Well, let's throw that gap high in there. And I remember that this is probably looks pretty redundant and not necessary, but remember that this is something. This is being recorded and screen snapped, right? So I want to keep my methodology and process ticking over. I'm about ready to drop these migrating VPOCs, especially now that I've got Blue Boy on the staff over here. Yeah. So we've closed the gap. What are we going to do now? Are we going to be accepted in value and price? Here's the value area high, which still isn't right as far as I can see. It looks to me like this thing is not. I was having an issue with that. It looked to me yesterday. That is not the value area high from yesterday. I've redone the data, scrubbed the data. I don't know. And this value area high doesn't seem to be plotting correctly, and I don't know why. But that is not, in my opinion, the value area high from yesterday. 1575. That's up here. That's the session high, right? Here's the value area high. Oh, oh, that sucks. Magical. You know, you pay money, a lot of money for all this crap, and then you silly me for expecting it to work. Yeah. These lines and levels have nothing to do with Bookmap. They are the only thing Bookmap has to do with them is when it refreshes the level. But as I said earlier, the lines and the levels flags are based on the exact same data. Now you see they've chased again. Here's settlement and the previous, the overnight VPOC. So we are at least maybe coming down to earth a little bit. Who knows? So we closed the gap early in the session. Are we going to be accepted? Here's a previous close. Some people go with the gap close, and so for the gap close guys, they're probably happy to. Okay. Now what? What have I forgotten? Something? I'm on the right screen. Well, that's a start. Antonio's here, so we've got I bet it's nice in Portugal right now. I wish I was. We wish we were somewhere. That's for sure. This place has gotten a little too goofy for this old cowboy. I can't even go home because where I grew up is probably one of the more crazy places in the country now, because it's become the avant-garde shishi place for all the pencil necks from who knows where, whatever city up there. The prices, they've driven up the price of land and everything by the astronomical. It's a beautiful state. Montana is where I grew up, on a ranch right up on. We had the Continental Divide markers on our ranch right down. We owned a mountain up there. We had a Continental Divide right down on our ranch. So springs and creeks on the west side, ran to the Pacific, and springs and creeks on the east side ran to the Atlantic Ocean. That's the purpose. That's the Continental Divide, in case you don't know. It runs along the top ridge of the Rocky Mountain chain, which goes up the whole country, and that's the watershed. A little geography history for you there. A little useless factoid. Okay. Okay. Well, it's encouraging to see a little rational behavior here. I'll tell you one thing. If Powell comes out tomorrow and the Fed doesn't cut this market, you're going to see Donald Trump's tweet bombs look like a little wiggle on a seismic chart, I'll tell you. That they will cut, and there's no question about it, I think. I don't think there's even any, I don't know, there's some, I don't know, betting site or probability site or something that's got that, that marks that up. The big questions are on the future cuts, which is for next year. So here we are. Going to be tracking this on the trigger chart here today. This is the trigger chart based on my backtesting, which is here, and the backtest rules. This is just visual confirmation. I'm thinking about doing something though. I'm kind of half spooked, but maybe. I'm thinking about turning the system on. If I turn the system on to this chart or to the other one, either one, it will trade live in real time today. It will mark the trades as per the system, the backtest system, but it will not send active trades to the account, obviously. That would be a stupid, ridiculous. I don't know whether to do it here in the backtest setup or do it on the trigger chart. Oh, look at us go. Look at us go. Finally. Now, are we going to get are the gap rules going to come to life here? Are they actually going to apply? What a concept, huh? Remember that we have news at the top of the hour, huh? So hook in and hang on for that. The consumer confidence, and if they put it out, the new home sales, that yesterday that came and went like a dream. Isn't it amazing, this government shutdown thing? Just political wrangling by a bunch of immature, irresponsible people with no self-esteem or, really amazing to me. Putting the country and the people in the country at risk over their childish bullshit. And I don't care which side of the aisle you're on. Doesn't matter to me. I think they're both equally guilty to me, equally culpable to me. There's some crazy stuff on the Republican side of the mega side for sure, like this Johnson guy that refuses to swear in. He refuses to have the swearing ceremony for 2 or 3 duly elected United States congressmen from Arizona and other states because they're Democrats. How the hell can that be? Can some twisted moron just tip the government over at his own whim? I really find it hard to believe. I don't know. I didn't realize that crap was even possible. I guess it never happened because people had credibility and self-respect and, a sense of duty. If they were elected there, that was one of their duties. They did their duty. I guess. I don't know. I didn't know that kind of stuff was even possible. Just disappointing, though, that's for sure, isn't it? So here we are. We're taking them out. Boom, boom, boom. We've got several levels pinged in a row here. So our statistics are hitting, and of course, I hope I said this at the beginning, and maybe I forgot, but these are not hard and fast lines in the sand. I hope that I explain what a statistic is and probabilities and how these levels are derived. This is the percent of time of days that this level was revisited when we opened higher in range in a data set of 2,000 days. That's a statistic, and those are probabilities. That's the way the market works. That's my story, and I'm sticking to it. So there you go. Well, I have nothing to do here because I am focused on the initial balance trades, and they base around the initial balance statistic, which is not a thing until the first 1 hour of the RTH trading session has been completed. What am I doing? I'm watching the market. I'm narrating. I am taking in this information and this data. I'm keeping an eye on Blue Boy because he's sliding off the. One really interesting thing yesterday that I noticed, which I got into the stream late, but I did not need to scroll. You'll notice today we're having more of a normal volume and trading volume. Blue Boy's going to scroll off the left, and I have to keep bringing him back. I didn't have to touch it all day long. The entire session stayed within the chart here. That's how light it was. That's how light the volume was. Pretty incredible. I have not seen that before. 69% or whatever the hell it was of average volume for that time of day. And at one point we were down to half a point ATR on a 1 minute. Or 2 ticks, in other words. So we're checking them off right, left, and center here, huh? We closed the gap. We are moving. The thing that's wrong here is that this is just the wrong volume. The volume profile and these levels are not lining up right, and I don't know what to do about it, to be honest with you. Something's wrong somewhere. If this is the volume profile from yesterday, and it is, this is the value area low right here, not where we're trading. I'm not sure what the Sam Hill is going on with that. And I've tried everything I can think of to make it stop. I'm going to have to reach out to Tweedledee and Tweedledum over there at the IRT Linsoft folks and ask them, what the hell, over? I've made no changes to anything. I mean, these session prices have been, popping out session prices since Christ was a kid. The only thing I could, what level is it? 6902. Well, I don't know. Well, 6902. Now, what's happening is, I think, no, there's 6902. The developing value area low and higher are correct. There's nothing at 6902. ETH low. You see the crosshairs there, 6902. I don't know what to say or think, actually. But I can tell you that according to the data here, this is not yesterday's value area low. And this is not yesterday's value area high. That's just stupid. If you know what I mean. Ooh, there's that 9 o'clock number. No, it's not. It's only 8:56. Well, somebody said something. You can bet on that. That's a tweet of somebody. Which brings me around to where did random risk go? I'll do this at the top of the hour, I guess. So I forgot to mention this, but it's really important. You see that right there, okay? Unidentified critical risk. This is absolutely nothing to do with politics. This is a fact. Let's see who said what. Natural Resources Minister, we're ready to talk about Keystone. Oh, well, that's great, Keystone. Let's rape the environment a little bit more. But anyway, that's undoubtedly why this thing bounced. And we have the news coming out at the top of the hour, right? The consumer confidence. So we are in a situation where we have an unrecognized, huge potential critical risk to the market all the time. And it's because of random tweets and random whatever, you know. Now let's watch the consumer confidence number here and see what we get. And then I'll continue the critical risk story. There we go. Well, their forecast is 93.4. Previous was 94.2. Let's see what they get. Consumer confidence. Got about a minute and a half to go here. It comes out at the top of the hour. Well, 1 minute. And this is a perfect example of an identified risk, right? The market, financial markets, especially of the most, of the United States and of the world, the leading markets, shouldn't be a surprise, right? That if you think about that for a second, you'll think, boy, that's not good. That doesn't make me feel very warm and fuzzy. I want to have these people know what the hell they're doing, and I want it to function as it normally does, a auction market theory. 2 seconds, 30 seconds, 10 seconds, some amount of seconds, and we're going to have this number. And then what are they going to do? Fall out of bed or nothing? Who knows? That's a whole lot of who knows right there. That's about a lot of nothing. Well, there we go. The bots are busy reading. The number's not pushed yet. You see that the reaction is pretty muted here, as far as I'm concerned. Case Schiller was out. That could have had something to do with it. That was only at 8, though. Well, there we go. 94.6 was 95 previous, 93.4, so 95.6. You would suppose that's probably a good thing, but who knows? And we're also got new home sales that's supposed to be out. If that's the case, if we get that data point, which is all, of course, up in the air with this bunch of children back in D.C. So back to my, blurb about unrecognized random risk. Everybody that's a trader or has been one for more than a couple of months better know that the first Friday of every month at 7:30 in the morning, we have the non-farm payroll report. That is the biggest market moving scheduled number. We know that. It's scheduled. It's not unrecognized. It's not random. It's not anything. It is a very serious number, has high potential risk and potential impact on the auction, but we know about it. We know that it's 9 o'clock, at 8 o'clock today, we had the S&P. We know that we had, at 9 o'clock, we had consumer confidence. We know that tomorrow at 1300, we're going to have the FOMC statement, and we're going to have the FOMC interest rate. Huge impact, potential impact on the market, but it's scheduled. We know about it. We can plan and mitigate our trading and our risk. On the other hand, this crap, this is the result of a tweet at 10 o'clock in the morning, unsubstantiated by any evidence or corroboration or, not a press conference, not a planned statement, a tweet at 10 in the morning on a social media. None of which came true, none of which was applied. All of which was walked back by other members of the administration, up to and including a complete reversal just recently. 227.75 point sell-off in the S&P, in the ES, based on a tweet, out of no place. That is a huge, if you don't recognize that as a huge potential, unplanned, unrecognized risk, don't care if it's Republican, Democrat, or, Jake the dog, Joe shit the rag man. Anybody that can do that, any time that can happen out of no place, that costs people their accounts for nothing. And now look at us. My conspiracy theory is that, well, they wanted to get down there and buy a bunch more of them. Someone's friends with a lot of money needed to buy some more inventory, so they got down here and bought inventory. And now what are they doing? They're making money hand over fist. But it's unplanned and it's unrecognized. So That's why I call it random risk, right? You got to be really careful. And my suggestion is that you don't ever, you limit the amount of exposure you put your account in the market, you know? Limit the risk exposure to your account. Always trade with brackets. Always have a stop and a profit target in the market. You may get slippage, but you'll get out. And that's my statement about critical risk, because I want to be sure it's clear here on the stream in the record, right? Well, we closed a gap finally, a gap, some gap. What's going on in trigger world over here? Well, nothing yet. Why is that? Because it's not 9:30. These are not connected to any system, but they accurately represent the levels within my trade system. These are custom indicators that I built for this chart. Notice that they're not plotting yet. That's because they don't start until 9:30. That's when the initial balance happens, right there. And these are signal markers, also not connected to any trading system, but accurately reflect where those signals would fire in my trading system. Now, the reason for this is just, I guess I'm old enough and want visual confirmation that this stuff is happening when and where I expect it to. That's what this chart started out being, was just a visual confirmation for me. Now I've got to decide whether I want to throw these levels on here, or the system on here, or put it on the backtest chart. And this is a visual representation of the IB. There are two initial balance trades, the IB high, the IB continuation, and the IB failure. And they apply at the IB high and the IB low. So we're trading lower. I would expect to start maybe getting signals on the IB low. Yesterday we were in the IB high all day long. Not meaning nothing, but I'm just, I'm just pointing it out. I'm not sure what to do here. I'm about half tempted to throw this over here and see where the hell we go. This is essentially, or I should say the trigger chart is essentially just a copy of the backtest chart with some of the optional buttons and crap removed up here. But the system, I can throw the system on whichever chart. Typically, I don't. Typically, I just manually, visually confirm them. So we'll see. Cross that bridge when we get there, which is in another 20 minutes. What else am I doing on my schedule over here that I've totally missed out on? Okay, so let's talk about the initial balance trade that's coming up that I'm going to work on here. Yeah, that's probably a good idea. Let me get some water. All right. I'm waiting for an hour and 10 minutes in. Sorry. Boy, having this thing not work is irritating. It's so important to have the accurate time time chapter stamps for the stream, because obviously the stream is a minimum of 7 hours every day. starting at 8 in the morning and going until 1500. Well, I don't know about you, but I'm certainly not going to sit and listen to all 7 hours of that. If I want to know something that happened, what happened at trade number one, what happened at whatever. So those timestamps are really important. Another reason that I think I mentioned this, but that I stream to YouTube for obviously accountability and transparency, but I can review the stream on any device, so I don't have to be standing here. All right, so the IB trades that I'm stocking are, where'd Blue Boy go? There he is, okay. The following, here's the IB high, and there's the IB low, and we know the definition of them. But, in case you're new, not anything mysterious or magical. Simply mark the high and the low of the first 1 hour of the RTH trading session. IB is an acronym for market profile, initial balance. It's the high and the low, of the first 1 hour. You could call it 1HH, or HH1, whatever. But they call it initial balance, and I like it. So there you go. I started with market profile, so poof. There you are. Okay. There is a statistic associated with that, but you have to be really clear in your mind, firmly understand that there is no statistic until 9:30. Until 9:30, this high will go up with price or this low will go down with price. It's got nothing to do with the statistic. At 9:30, they cease to move, and then we have the statistic, which says the following. There is greater than a 97.7% probability in all four open types. Notice that 97.7% is the lowest probability occurring in this higher outer range open type. 98, 98.5, 97.9. There's a greater than 97.7% probability that at some point between 9:30 and 1600 today, which is the RTH session after the initial balance sets, price will exceed the initial balance high or the initial balance low at some point. That's the statistic. What does that mean? Well, that means, if you want to look at it the other way around, that means that there's a 2.3% probability that it won't touch either one. And to drive home the point that that's not 100%, about 4 Fridays ago, we had a 2.3% probability day. We did not hit the IB high or the IB low in the entire RTH trading session up to and including the close at 1600. So remember that. It's not 100%. So let's assume that it's 9:30. We have the initial balance active. The statistic is active. What are the two trades associated with the initial balance? Well, there is the IB failure. Let's look at it from the low side. We come down here. We take out the statistic. We don't get any action below, and we trade back into the mean. It's a mean reversion, outside in. It's a fancy name for the mean reversion trade based on the initial balance. Or in the other way, we trade up to the high, we take it out, we can't go any further, and we mean revert. So there's one of those for the high and one of those for the low. There is also the IB continuation trade, which is, as you can imagine, we take out the statistic and we've got all kinds of horsepower and we keep going. It continues. Now, if you think about it for a minute, those possible trade alternatives can be suggested. Jesus, I can't talk all of a sudden. Can be suggested by the current trade of the session so far. Typically, if we have a rotational day or session in the first 1 hour, what would you expect was going to happen? You'd expect mean reversion because that's what it's been doing for the last hour. If you have a directional day, you could, I'm sorry, and the rotational day would suggest the IB failure. If we have a more directional day, you would suggest that we would continue in a directional, whichever direction, and that would be an IB continuation. So there you go. What I am doing is I've set up a set of rules to backtest, because that's what I believe is the correct way to approach trading as a business of statistics and probabilities. And I believe that because it's the guiding principle for the most successful traders and hedge fund people in the world. Any professional trader understands that the market is random and that the only profitable, consistently long-term profitable approach is statistics and probabilities. We'll talk about that later, and I'm sure somebody will disagree, but, you know, whatever. Come on, man. Okay. What am I doing now? I don't even know. Okay, let's look at the trigger chart. So what's happening here? Well, we're not plotting these lines yet because it's not 9:30. I'm thinking long and hard about throwing the system on here. I don't know what to do exactly. I don't want to bog it down real bad. I don't want to have some drama happen that I'm not expecting. I think I'll stick with the original visual confirmation for now. This is just by the way, this is just a 1 minute bar chart. I mean, of the ES, right? So there's nothing mystical or magical about this, and it's just got these levels and signal markers on here, and they are just custom indicators exclusive to this and the other chart. That's all. No automatic triggering or any of that kind of crap. I've got the portfolio up here based on this account because I had some real strange behavior on last Friday that I want to monitor for. It was not representing the trading correctly as coming from Bookmap. I'll talk about that later. You can go back and look at the stream. Anyway, so now we are at 17 minutes past. We've closed the gap substantially. We haven't really been accepted down there. This value area high and low crap is really bothering me a lot because I share by the way, I share these sessions prices with anybody that wants them. They're live from Sunday night at 1700 through Friday night at 1600. And there's a lot of people and a couple in the TLab and Static and whatever that use these session prices. They push automatically from my book, from my IRT 24 live, you know. And that's going to hang somebody up. I don't know what to do about it. I'm pretty dumbfounded, actually. What I will do is confirm the levels are pushing to the correct V-pound, which is a user variable. Weird. But I typically don't, I don't recommend you do anything like that diverts your mind from trading, my mind from trading during the trading session. That's homework stuff. Never alter your trade plan during the session, I don't believe. You know, remember the random risk sermon. And Trump is really, you know, he's like the leader of the band, right? So that's who put the tweet out. That's who's responsible for this beauty here at 1020, based on nothing. Literally based on nothing. The reasons he said he was going to put this 100+% tariff on China didn't exist, were not real, and never once did we even, another word did we talk about 100% tariffs on China, and all went off the table immediately. an additional 100%. You know, I don't know how you can get more than 100%, 300%. Yeah, it's pretty weird. Anyway, so he's been real busy this morning, as I said, primarily insulting and calling Jay Powell a bunch of names that I don't understand. But anytime he's, I guess, can't golf and gets bored or whatever, he'll start tweeting something, and you never know what or why. So that's why it's it's a random risk. I don't care if it's a donkey or Trump or, Harris, whoever. I don't care who it is. If we don't know about it, it's a random risk, and it has the potential of being very critical, as ought to be pretty obvious right over here. So that's why I'm harping about it. And remember that this is my virtual journal. So I'm talking to myself most of the day, except when I say hi to Antonio or somebody. Okay. Now, yesterday, remember that we had one of the lightest volumes and the most nothing day in the entire recent memory until the last 20 minutes of the market. And if you don't believe me, here's yesterday's RTH session. It was less than 20 handles all day until about here. So noonish, and then up we went. Huh. Where are we now? Well, we're up to 73% volume for this time, and down to 1.75 ATR. Open interest is on its ass. This is the SPX. Yeah, crazy, huh? Pretty crazy. Oh, here's a fun one. Let's, well, we've already done that, so never mind. You see, we had the gap, right? So remember in the pre-market when we put the statistics in here by their associated session prices, 65.8% of the time we revisited the previous RTH high. In this case, that would close the gap. And guess what? We closed the gap. Yesterday, we did not. The day before, we did not. It's a probability. It's not a hard, fast line in the sand. That's real important to get your head around that. And I'll talk about trading as a business, a consistently profitable business rather than a video game or gambling later when I'm not getting ready to rumble. Yeah, maybe not. Waddle, maybe? Notice that Donald Trump just awarded his son's company, Don Jr., $39 billion contract for drone manufacturing. Somehow Donald Trump Jr., the property hotel person, has become a drone manufacturing expert. Military drones. $39 billion contract. That's pretty cool. Wish he'd give me one. I'll build him a drone. I'll build him two. It's kind of staggering to me how flagrant. I think that's really, if it's not illegal, it's got to be super inappropriate, I would think. But I guess not. I don't know. Just every time I see a new news thing bob along there, another news point that I thought was pretty incredible. Amazon, Bezos, ponied up $40 million for Melania Trump to make a documentary about her life or something like that. The amount of money that these people throw around is just staggering to me, and it should be alarming and staggering to a lot of people. But unfortunately, the mass over here haven't seemed to wake up yet or something, or grasp the gravity of it. I don't know. It's pretty crazy for me. So let's see here. If I can get this the way I want it, which is always tough for some reason. No. There we had it. I want this to be 1 point high and blue boy in view, meaning I know this is a point. Within there is 2 ticks or 4 ticks in each one of these. And there's blue boy. So I have the entire session in range. Look at what happened. We closed the gap and we are just frozen in a basically nothing range. We're about 20 handles wide on the range so far, from 06 or 07 to 27. That's where we were yesterday, pretty much the entire day. Until the end, until the last 15 or so minutes, I guess. This is, ridiculous. Tomorrow's going to be a rodeo. Wear your spurs tomorrow, because I'm pretty sure it's going to get wild and woolly out there. Let me point out something here now. Basically, just looking for stuff to think about. Okay, we don't have these lines. Where'd they go? Oh, it's not 9:30. There you go. At 9:30, these lines will start plotting. And they're simple. Continuation high, low, trigger, pullback. For lack of, you'll see the complete names here in a second. Those, the minute we reach 9:30 and they start plotting on the trigger chart. See if I can do this without screwing something up. Those levels will start plotting, also push across and plot here on Bookmap for my visual awareness. You'll see the lines, the same colors. Unfortunately, I can't change it. With this levels indicator, I use the levels indicator to do that. And with these level indicators, once you have a line type selected, in this case dashed, I can't change them. And I can only put one of those line indicators on here at a time that I didn't really mess with it much, but anyway. There you go. And we're going to be plotting in 30 seconds. And you'll be able to watch over here. on the trigger chart. Remember, this is 06 to 27. There's 20 handles there so far in the first hour with 2 news reports. And there we are. The IB statistic is now active, and you see the beginning of the plots right here, right here, right here. These lines are starting to plot now. And the next refresh of the levels chart we have, those lines will now miraculously show up here, and there they are. There's the continuation, IB high continuation, the IB high pullback, IB low continuation, IB low pullback levels. Same color and same tag as we have here. There you go. Isn't it cute? So the initial balance statistic is now active. And what does that say? It says that there is a 97.7% probability that this boy or this girl down here will be exceeded by price at some point in the balance of this RTH trading session. In other words, between now and 1600 this afternoon, this line or this line will be exceeded. This level will be exceeded. That's it. What am I doing now? I'm going to spank Blue Boy for, disappearing, hiding out behind the woodshed over there. So amazing yesterday when I realized that I had not had to do that all day. The entire day happened, and this never scrolled off the screen one time. And I'm at 1 point high. That's good. I've got Blue Boy on duty. That's better yet. Look at how all these levels are stacked up. I don't know what to do about these value area high and low. That is really sucks. I can't just arbitrarily change the session prices indicator because of the way the export and the levels are pushed here. Those V pound numbers are in. There's a sequence there in the template. That's really irritating. I don't know what to think. I'm wondering if I'm having a brain fart or if it's normal, but that's not normal. This is not the value area high. This is not the value area low. The way this is supposed to work is the value area high and low represent the previous auction. The developing value area high and low is for the current auction. So there's that. And here we are. There's all of our little guys showing up just as they're supposed to. And of course, that same thing is happening over here. Okay. Now, there's nothing to do. We're stocking the trade. We're going to spank Blue Boy some more because he keeps hiding off the side, which is encouraging, actually, because we're getting some volume. That was so strange yesterday when I realized that. I thought my stuff had broken, actually. Well, wait a minute. Why isn't this chart updating? It had, but there was no updating to do. Now there's something to be said here for the range requirement. And where did that go? One of the things that is really important to say here is, this is definitely coming from advice, right? From experience. Do not. The statistic is live, isn't it? Okay. Don't fall into the trap of trying to trade to the statistic. Oh boy, we're above the mid, we're above the VBOPs, we're above the developing value area high, we're headed for the IB high, and you get long, and then you get spanked. It's not a very good day to use that example. Typically, we're closer, right? But, well, this would have been a good one down here, perhaps. We'd gotten below everything. The session has trended down so far. We've closed the gap. We're going to take the low. Do not trade to the statistic. I have the data, on my other machine in my old journal to prove that that's not a winning strategy. Wait for the statistic to be hit and satisfied, and then you have those two trade possibilities. And that is all dependent on how you have vetted the trade. Vetted meaning identified a setup, identified the parameters that qualify that setup to enter, and then captured a data set, a statistically significant data set of that exact setup and those parameters, and identified statistically and mathematically whether that idea has a positive expectancy or not. If it does, every time the thing presents itself in the live market, you take it. If it does not, next, you forget about it and move on. The key to that is to make sure it is a statistically significant data set outside the probability of random distribution. That's really important. Really important. Man, I'm telling you. What the hell does this say? Okay, I don't know why that was saying that, but that looked a little silly to me. So here we go. Hi ho, here we go.
This value area high and low is really disturbing me here. My thinking about this is when something goes wrong, what else is wrong? You know, I've noticed this that as of yesterday, what else is not being, you know, functioning as it's supposed to? Now, yeah, I've got to look at the template. I'll just have to do it tonight. Hey, Panda. How are you? You want to say hi? She missed you. Hmm. Well, that's pretty weird.
Okay. What are they going to do? Most likely nothing. Oh, that's pretty weird. Anyway, I'm not going to worry about it for now. What the hell? Something is definitely going wrong here. And I don't know what it is. It's always encouraging. Huh. Okay. Start at the beginning, go through them one at a time. Do. Well, I'm going to be pretty disappointed if they continue this crap like yesterday. That was terrible. That was pretty terrible. Hmm. Hmm. 30 through 35. Oh. I bet I see the problem. Hmm. Okay. I'm going to try to sort out some of this stuff here. Yeah, those are right. Hmm. Well, you know, this is as much fun as you can have with your clothes on again. Maybe not. Yeah, you know, if you have any, you want to go watch grass grow or paint dry or something, this is a good time to do that, probably. Remember that the most critical tool you have in your trading office is sitting on your side of the monitor. So be sure you take good care of yourself. You know, all the time and money we spend on equipment and software and programs and data feeds and monitors and all that stuff. None of it is worth anything. It's processed by our eyes and our brain, and we use that to make financial decisions that affect ourselves and our families. Really important that you stay hydrated, healthy, well rested, be continually aware of you and your state, right? And that's where you'll recognize that you're having FOMO or, you know, your monkey mind is kicking in or whatever. You need to rise above that by being aware, simply. You know, you're aware of those things, then you don't act on them. They don't trigger you. That is pretty crazy. How can that be going to the after you have something work for years, you know, and then all of a sudden it doesn't, I have to stop and think about, okay, where'd all that come from? I know that it's, you know, done from the vPound variables and it pushes through the export data function in IRT and then it's imported into Cloud Notes by CSV. But what I'm thinking is I must have corrupted or added another level to that V-pound number somehow. The V-pound variables, there's 300 of them. They are user variables which store data for IRT for use, wherever. And I'm racking my brain if I got involved with the funny part about it is everything else is correct. Everything else is correct except just the value area high and the value area low, which reflect the previous auction. The developing is correct, so that means that only those two variables right there, which is 130, I think V-pound 130, 131 maybe, are wrong, or being overwritten or corrupted in some way. I just assumed that restarting, and I had hoped that restarting and having the data be, I thought yesterday perhaps it had something to do with IRT not properly handling two huge gaps in a row, but that wasn't the case. And I've scrubbed the data and, re-downloaded the data and begged and pleaded with the data, whatever else, all to no avail. So there you go. I'm going to have to duck away from my midday break a little bit early because I've got to take care of some stuff here at the house. Just FYI, not anytime quick here, but, pretty soon, around 11:30-ish. I'll go do it. I've been trying to go for an, 3 or 4 mile jaunt every day at midday. Break, rest my eyes, following my own advice about taking care of that critical tool that I have here in the office, me, rather than just a once a week 12-miler on Sunday. I'm going to bring that back too. Yesterday, last Sunday killed me. It took me a while to recover after that. I don't know why. Okay. So barring some random risk, there's nothing on the docket that would interrupt this market. We're at about 20 handles, as we were almost all of yesterday. My opinion is just my suspicion is that they're going to try to chop them up. They're going to make retail soup, make a little money, and they're waiting for the Fed story tomorrow. Boring, but yeah, nobody said trading was a fun-filled, exciting business. If you trade as a business and not a video game or gambling, it is not. You can go an entire day, as I did yesterday, with no signal and no trade. That's the way to do it. And there's nothing wrong with gambling or video gaming if that's what you enjoy doing. If you have, this is not my way or the highway. This is the way I'm doing it and the way I'm narrating it to myself and to anybody that wants to follow with a consistently profitable setup. 10 bells here we have. Okay. So we're 30 minutes in. There's no reports or anything on the horizon. I don't know where the random risk squad even is. I know they were in KL for, I think, the weekend. And where the hell? I think they're going to Korea or somewhere. I think he's just. I guess they figured it's time to go insult a bunch of people in Asia. I don't know. It's really bizarre to me. And, you know, throwing his toys out of the cot and all the big drama about Canada on account of an ad run by a province during a TV show, a sports event. And, by the way, a very absolutely factual ad with a recording from Ronald Reagan. Somehow, you know, somehow reality didn't fit into the make-believe world, I guess. I don't know. So we're going to not have any trade talks with Canada. Ooh, everything's over. Our largest trading partner for years. And I'll refresh your memory that this was, we're going to never have anything to do with China, and I'm not going to meet with Xi, and this is 100% extra tariffs. Oh, well, maybe not. It's, so who the hell knows what'll happen with Canada. He's been awful quiet about Mexico lately. That's interesting. Jesus, criminy Christ. So, yeah, this is pretty fun, huh? I don't blame Blue Boy for running away and hiding. He's got nothing to do over here. There's our session. Isn't that exciting? You couldn't get more in the middle, could you? There is the middle. By definition, there's the middle. Yeah, well. There you go. I wish I could shut that off, but I don't know how to do it. So I'm not going to worry about it. I get my mouse in the wrong spot, and Windows 11 starts telling me all kind of great things to do. I'm still concerned about what to do with this damn value area high and low thing. Let me just see where that's pushing from and to. So there's a set export data. There's that one. There's this one. What's this one doing? What the hell is that? I think I can get rid of that. I don't think I need that anymore. TM light. I think that's it. Light crap. I don't need that in there. But I'm not going to change anything now, obviously. Obviously. That's an export I don't need for any reason. I need to get rid of that. What's the third one here? What the hell? Huh. Something's pretty goofy here. I've just discovered. Well, good. That'll give me something to do tonight. Oh, I'm so excited. Hmm. Okay, well, that's just about fun, huh? Obviously, there's no triggers. Now, as the profile starts to develop, this is just a, ancillary tidbit of useless information, but you notice how this is starting to resemble a B-shaped profile? Small b reversed. Let me see something else here. Let's look at market profile. Might be easier. You see how this is becoming a B shape? Well, that is in market profile logic. That is indicative of long liquidation. What a surprise! Somebody's taking profit up there after 2 days of irrational exuberance. And we had a similar amount of it yesterday. And a P-shaped profile, kind of this thing, is short covering. Still trying to clean up this crap, I guess. Taking out all these stops here. This is here. So this would be, was there a bunch of stops up here short covering? I don't know. And then we got these two things here, which are here and here. It makes sense, obviously. Long liquidation or short covering, but doesn't mean it's any fun. I'm going to resist the urge to do anything over there. And I'm maybe just drop a chat in the levels in the TLab. think anybody even probably cares anymore. Okay, apologize to those guys. I never think about what screen I'm on when I go jump over to the bookmap or TLab or Static there. Sorry about that. And that ought to open your eyes a bit. We're at 64% volume at this time of day and about 1.5 points ATR on a 1 minute bar. Ridiculous. Now, there's no question about the fact that being undisciplined and trading the hell out of things is a lot more exciting and fun. But I think at the end of the day, the effect, what matters is the effect on your account. Are you compounding your account in a positive way or blowing it up? I'm not saying I know, I'm asking a question. Just asking a question. Yeah, that'll help. Yeah, well, doesn't say much for the market when going out front and cleaning up pine needles and sounds like more fun, does it? Ridiculous. But here we are, and not making up trades or making up reasons to trade, not succumbing to our monkey mind here, and you know, which is what humans probably do best, is to make up stuff. And that's how, you know, that's what kept us alive. I call it monkey mind. Tom calls it Hyde, you know, like Jekyll and Hyde. You can call it whatever you want. Whether you believe in evolution or creation or whatever else, I think everybody agrees, I think, that humans have been evolving for a long time, or developing for a long time, thousands of years, based on the fossil record. You can't argue with it. And that means that the wiring, you know, we have evolved with specific wiring, which kept us alive, served us well. It kept our ancestors alive and allowed them to pass on their DNA to us. FOMO, wanting to be right, revenge trading, seeing patterns where they don't exist. All of that stuff is part of our monkey mind, I call it, and that's built into our wiring, and you're never, ever going to get rid of that. What you need to do is constantly be aware of you and what you're thinking and how you're feeling, and when those things present themselves, you don't react. In this market, you don't start making up reasons to click the damn mouse. If you have a vetted trade, you take it. If you don't, you don't. Simple. Now, are we going to take an IB low? Maybe. Whatever that was about, who knows? So yeah, you need to recognize that you're, you know, and there's a lot of people, there's a lot of conversation, a lot of YouTube, a lot of people talking about trader psychology. And yeah, it's an important thing. Psychology is an important thing. But remember that a lot of those people are making their living selling you books and courses about trader psychology. And that can be a lot can be said for just, you know, pulling up your boots and acting like a big boy and girl. You know, I don't overtrade because I'm an adult and I don't overtrade. I'm aware of the feelings of FOMO and I don't act on them. I also don't go to the bathroom in my pants, you know, because I'm an adult. I think that's the best approach. Guys like Brett Steenbogger and those people, yeah, they're, I'm sure, nice people, great guys. But don't forget that he makes his living selling books and courses on trader psychology. Can he trade? I don't know. He makes a lot of money selling books and courses, for example. So I think if you approach it as a, you know, just, well, a lot of different saying, you know, cowboy up, pull up your boots, whatever it is. Act like a big boy and girl, and I don't overtrade. If I don't have a trade set up that I've pre-identified as a positive edge, I don't trade. Pretty easy. I think if you approach trading that way, you'll have a much more relaxed, confident, and successful outcome. That's just me. Just remember, this is my trading journal and I'm talking to myself here. So if what I'm saying, if what I'm telling myself, it falls on fertile ground in your mind, great. If not, you know, blow it off. Or, you know, jump in the chat and tell me you think I'm full of crap as a Christmas goose. I don't care. That's up to you. So here we go. Exactly nothing. This happened yesterday. We had an extremely low volume day up until around noonish or something, and then for whatever reason it kicked off and up they went. I've said this about a dozen times, but it will continue to through the day. The entire market world, everybody is hanging on the Fed rate decision tomorrow at 1300. So there you go. Keep that in mind. And we're in the big earnings season too, don't forget, which is always crap trading, usually, in my opinion. And today's a big one. Where the hell am I here? Boom, boom. Here's our world famous financial juice. Here's our reports for the day. Let's look at earnings. Oh, there's earnings just for today. Tomorrow's bigger. And tomorrow's huge. Microsoft, the Alphabets, Meta. There's 1, 4, 7, 10, about 12 trillion dollars in market cap reporting tomorrow. Now remember, this little quarter moon over here means after the close, and the sun means before the open. So there's that. And that's it. Look at the day. Look at where this Wednesday starts. Clear down there. Huge. And then Apple. Hot on their trail the next day, and Amazon the next day, on Thursday. So this is earnings. I knew old floor trader guys, a guy that I learned market profile from. He wouldn't trade rollover and he wouldn't trade earnings. He just quit. He said, I don't need to do that. I make my money when I trade my way, and that's it. Pretty good approach. I don't see any random risk stuff. Maybe they're flying. I don't know. Remember that they're in Asia, so it's about 12 to 13 hours ahead of us. Middle of the night over there, so maybe that's part of it. But boy, he was all over the Twitterverse here, just insulting up one side and down the other, pal. And I don't know what the expected benefit of that is, to be honest with you. But I can tell you one thing, nobody cares what I'm thinking. So don't trade unless you have a vetted trade. I am vetted. I've used the backtesting system, which I'll show after, go through in a little while. These are the essential rules. This is just a visual confirmation chart for me, where I have created these session signal markers and these levels as custom indicators, so that I can see if stuff is happening where and when I expect it to with my trade. But I've already backtested, and then just for example, $50 days is not nearly outside of random distribution, but I was working on this last night. I have 50 days, 82 trades, 28 wins, 28 losses, average win, average loss, 33 scratch, 54% win rate. about that. The veterinarian calling Panda and Lucky's due for their vaccinations. Anyway, profit factor of 1.33 and a trades per day of 1.64. Position size is 2. In that 50 days, it took 164 positions. I have a 57.32% probability of achieving T1 on every trade that I enter with the back-tested setup of the initial balance high and low based on these, which is reflected by these levels. 28% of achieving T2 and took 42 stops over that period of time. 25%. There you go. That's the way I believe to do it. Now, where are we going? Well, we have taken out the IB statistic here. According to the old rules, which are here. Yeah? Now, my trade rules, we don't have an A trigger and we don't have a B trigger, and I'll tell you exactly why. Or an A and a B rule, and I'll tell you exactly why. We didn't take this initial balance correctly. See the close? The close needed to be below the initial balance low. Had that happened, we would have had an A. This went down to the continuation zone where we would have had a B, and we still do not have a trigger for the continuation trade. There's one right there. Meaningless because we don't have an A or a B. And that's, now, do I need to tweak those rules? Here's the way you approach that. You don't just arbitrarily do stuff. Okay, I know what my stats are for a consistently statistically significant period of time, 500 trading days. Change the rule. Change one thing at a time. Change the rule. Maybe make it the low, not the close. How does that affect the statistics? You see, that's the way I believe to do this scientifically and, you know, with proper methodology. And that's, remember, this is my stream talking to me, so there you go. I'm just explaining why there's not an A, why there's not a B, and why there's no trade going on here at the moment. And if you want to rot, you know, the guys in Static that use this deep V reversal, that took the statistic out, took a deep V reversal, they got long, I am sure. And now they're in the money 5 handles. And who knows where they're going to go. Good for them. That's not the trade that I have vetted and the trade that I am doing now. So I don't even care. I mean, I observe it, right? And I observe it from the point of view of, well, maybe I'll work on that one next time in the next vetting process, because I'm essentially through with the IB trades. So we'll see. That's where we are. Okay, now I see a problem with IRT here. We were not plotting. Notice the progress bar at the bottom. See how it turns gray? That means it's not plotting actively. And I get screwed up from time to time here because I use the right and left arrow keys to toggle between my two primary trading displays. Yeah, I know. So anyway, oh, there we go. Now we have an A signal fire. And we don't have a B yet, do we? You see the A? Okay. What does that mean? That means there's two rules in the A setup for anybody that's curious. First of all, the key bar, trigger bar, the signal bar is that we have the open is above the close and the close is below the IB. Further requirement, it is the preceding bar needs to have a close higher than an open higher than the low, and the low than the close. Jesus, and the low needs to be above the IB. So this is correct sequence, and now we have an A. And remember, the A on the lower side and the trigger chart and the B, wherever one would be, is to do with IB continuation lower, and the green or the upper is IB failure. Oh, let's see where we're going there now. Now I'm really tempted to put on the system and watch what happens. Kind of spooked, but we'll see. The backtest, when it's applied to the chart, doesn't plot the signals. It would only plot the trade. So there's that. Now what we need for the IB continuation trade would be these signals. A. We need a B, which means price gets into the continuation zone and pulls back to the trigger zone. We would then get, down here's a B, and then we would get the trigger, and then we would go short. Now let's get our act together here, and let's get over here and go do our little checklist, okay? We have both selected. We've got the proper number of contracts. We're set to trade. So, assuming I get an A, a B, and a trigger, I am mechanically taking these just because boredom is killing me. No, not really. This is an amp. I didn't get in. I'm not talking about the drama with Topstep anymore. They have lost all credibility, and I can go through that briefly, I guess. But this is a amp trading account now, funded account, and I'm in a paper trading mode with Rhythmic Data because I want to make sure that everything's working properly. And as of Friday, it was not. I was getting some random behavior with IRT sending shorts when I wasn't doing anything over here. And this is the only trading signal should be coming from Bookmap. Now, just briefly, Topstep, the reason this is a Topstep warning, I should say, I guess. 250, I guess. Oh, 240. I'll make it 250. Ah, damn it. Oh, 250. Yeah, pretty disappointing, but I really got hosed. Topstep made a decision that if you know it or not, Topstep decided in August. I have been trading a Topstep evaluation counts off and on, been funded, whatever. They were handy for me. And the purpose of this stream, or the intent of the stream at the beginning, was to do a 0 to hero with the Topstep combine. And I was copy trading it to 4 others. August, they decided they were no longer going to support any other data sources, and they were only going to support Topstep X. However, I had never made an error. I was in compatibility, consistency rules. I had never needed a reset. I was abiding by all of their rules. Not my problem that they decided to change the goalposts, right? And I pointed that out to them, and they apologized and said, yes, definitely, as long as you continue as you are, you will be supported. You can go to XFA, you can go to live account, no problem. So I continued on, and I was within about one more profit target of all 5 of those accounts being profitable into the XFA and being able to withdraw money. And right after the 1st of October, I don't know, the 5th of October, whatever it was, all my accounts disappeared, and I went online. They had all been closed. I immediately got on the same support guy that I had talked with before, and he says, yeah, well, sorry, we decided that we're not going to do that. We're not going to support any of the traders who are using something else, whether you're right or wrong. Basically, go screw yourself. So I was really surprised at how the integrity and the word of Topstep and the respect of the Topstep contract, actually, because that's what a combine is. You sign all that crap, and that means they're gonna uphold their end of the bargain, and you uphold yours. That all went away. So that's the Topstep warning. Do not, and if you like Topstep X, Merry Christmas. Be my guest, but be careful. Who knows, if they would do that to someone who's been a supporter since 2015 and was in complete agreement and compliance with the contracts, well, there you go. I wouldn't trust them as far as I could throw them. So there you go. That's the Topstep story. And now I wanted to go outside and get that stuff done, which I need to do. But I sure as hell would like to see a trade happen. Am I going to trade it because I'm dying to see a trade happen? Nope. What is going on here? Okay. And I hope that it's clear about the trigger and the rules and all that stuff. These are just visual representations of the actual trading rules in the system for my benefit to visually confirm this shit is happening. This is happening when it's supposed to, as I've written the rules. So there you go. And it's correct here. It was not here because, as I mentioned earlier, this close was not below the IB high. It was on the IB high. Now, I could change the rule to say equal to or lower than, it's important for me to point out that the the IB statistic, per the rules of, or the understanding right here, has been satisfied. You see that it's been changed to blue from black, the text highlighting, text color. Another little trick IRT does, which is so cute. Every one of these levels which has been revisited as predicted, or as suggested, or whatever you want to call it, is changed to blue. Those which have not remain black. So the IB statistic, per the rules here, or per these this thinking, has been satisfied. And those IB rules are not my trade rules. So I want to be real clear about that. We have, and if you've got some other way that you trade the IB, for example, I had an IB failure before I coded up all these rules and everything. I would just, I would pretty much by discretion, well, we came down, we came up, we couldn't get anywhere. I would have probably gone short here, except that it would have been counter trend. Thank you, Blue Boy. But that's why I wrote specific rules, and we'll stick to them until I change the rules and do the optimization for the backtesting, and then move on to the next setup. You need to remember that large trading companies, Goldman, BlackRock, Citadel, they have hundreds, if not thousands, of programmers working on strategies and setups. I mean, and it's a real business. Quant trading, high frequency. It's not just, I think this is a good idea, let me do that, And so we're approaching it from, I'm trying to approach it as methodical and I don't want to use the term scientific, but you get my point, as I can within my abilities and equipment and that kind of stuff. Fortunately, I don't have a discipline problem like some folks I know do. Like a majority of traders, actually. That's why there's a 95% loss, blow up rate, failure rate in trading. They don't approach trading at all from a statistical point of view. They have no discipline. I'm going short, I'm calling the bottom, I'm picking the top, I'm doing all this crap that they think their hunch, their feeling, whatever, tells them is right, and consequently they blow up. I don't blow up. Risk reward. I realize that my primary mission as a trader is to preserve my account and to grow it exponentially by compounding, law of large numbers. Hey, Panda. You want a law of large snacks? Did you hear the V word? What are we doing? Repeat after me. Mean reversion. Outside in. Outside in. We're still in it about a 25 handle range. These things are wrong. I pointed that out. That's disappointing. And there we go. Well, what a surprise. Right back to the mid. What a surprise, eh? If you are trading a mean reversion, good for you. Pretty, not a lot of meat on the bone down there, but, you know, better than what I'm doing. I haven't taken any trades because I don't have a setup and a trigger. Now here are the B's, you see. So essentially we got an A, we have a B, come down here for the trigger, we got a trigger, and then we will go short. And in the trading system itself, the signals don't repeat. but this is just, again, for my visual confirmation, and I messed with it for a few hours on the weekend to get these sequentially set up, and it just wasn't working right, so I'm not going to waste my time. With the actual trade system, they are sequential, A, B, C, A, B trigger, not another one until a full trade has been executed and closed. Then it can start over. One thing you very definitely want to be aware of is the 11th commandment, which is thou shalt not diddle in the middle. Under no circumstances would I, or would anybody that I know of, recommend trading from the middle out. And just, if you think about it logically, what is the POC? It is the price at which the most contracts have traded so far in the session, meaning it's the most traded price. It's retail, fair value. I don't know call it what you want. It's the most likely price to rotate back and forth and consequently stop your ass out. And a word about this range requirement, which I have here somewhere. I thought. Yeah. The range or risk requirement. The way I do it is, obviously, I think it's important to realize my goal as a trader is not to scratch. My goal is to take my profit target. Okay? But in doing so, you got to get through your scratch or your risk neutral scale first. And the way I look at it is as follows. In order for me to have a valid entry, I need to have the range requirement, which is an unobstructed path to the first risk neutral scale, the first profit target. Look at this. There's 2 ticks between all of these lines, between all of these levels. Down here is almost as bad. I'm not saying that they won't go there. What I'm saying is that it lowers the probability each level, because at each level there is a tendency or the possibility for price to react and go the other way. So this is a horrible environment right here, in my opinion. Retail soup, my brothers and sisters. They're making a big batch of retail soup. think I was on the wrong screen maybe, but these levels, you see? Well, first of all, you're not going to diddle in the middle, so that's off the question. But let's say you're down here and you say, oh boy, I'm going to take this trade long, pullback. I'm going to buy the pullback. You got 1.5 points to the POC. Then you got a tick a piece all the way up to here. And it might go ripping up through here and take out the IB high and go, Bob's your uncle up the top. Who the hell knows? But that's not a highly probable situation or environment. And it's certainly not a trade I'm going to be involved in. Now I've got some extra rakes and stuff if y'all want to come over and help me gather the pine needles up out of the front yard. And the best part about it is our particular property doesn't have any pine trees. We're in a neighborhood of real high ponderosa pines here, but our particular property doesn't have any. So the neighbors are contributing all this wonderful work for me to do. Now, I'll leave this to Antonio because, as he well knows, and he's I'm sure at Tom's stream, but the minute I leave, this thing will break, somebody will say something or whatever else, and this thing will take off like a rape tape, one direction or the other, but I need to get stuff done before a certain time today, so I'm going to take my midday break early. Best of luck. If you don't think you have the willpower to be self-disciplined, turn off your mouse, sit on your hands, leave the screen, whatever. Okay, I realize it's the wrong day. I don't have to worry. My wife hadn't mentioned that they're coming tomorrow, not today, so I can anytime today I can do this. And of course, look at this mess. Not that that changes the market. And now remember, what do you suppose the ATR here is? I can assure you that it's less than 1 point. Shall we bet? 1 point. Okay, you win. And 62% volume. That, boys and girls, is a recipe for disaster. Yeah. That is the recipe for disaster. And anybody, you know, there's 1,000 internet gurus that'll tell you all about how you could have taken all of these trades and made all this money. And my opinion is that most of them are rearview mirror experts. Yeah, I shorted the open. No, I didn't. Because that's irresponsible. You have no possible statistics that would have given you any indication as to why you should short that open. If you do, drop something in the chat and let us all know. Got to be real careful of the internet gurus, boy. The rear view mirror traders. That's one reason I am so fixated and committed to transparency and accountability, and never taken any trade off stream. There's never a trade on this, in this channel that isn't fully visible graphics, graphed out by bookmap. No question about it. Oh, this is a structured trade, yeah. And I'm sure that some of those people are saying what they are saying, are speaking the truth, but how the hell are you going to know? And unfortunately, on the internet these days, my thinking is, to be cautious, that they are bullshit until proven otherwise, unfortunately. Unfortunately. And I can't begin to tell you how I would love to be able to have a signal in a trade, because I want to see how all this stuff's working. After the performance on Friday, which I told you was pretty weird. But I'm not going to just throw one on for the hell of it. I could do that, with a mini or something, just to see what happens with regard to the problem was, briefly or succinctly, I entered a long. Typical risk neutral package that we just went through in the pre-market. 2 contracts long, 3-point stop for both contracts, T1 at 3 points positive, T2 at 48 ticks positive, or 12 handles. And IRT went short 4 contracts, or recorded short 4 contracts. That's why I have this portfolio thing up here. It's what records the trades or entries and whatever else it is. And I was dumbfounded as to what the hell it was up to. See if I can find that. Now I gotta go back to the library here and look back at whatever day that was. I don't know whether it's big enough for you to see or not, but this is a screen snap I made just for evidence. Here's the trade. There is a 2-lot long. Huh? Risk neutral scale? Stop. 5 contracts short. I have no clue what all that was about. But as you can imagine, I am not going to be putting my live capital at risk until I have gone through this completely and confirmed exactly what the hell happened there. Look at this shit. You wouldn't even know that. It looks like the data's frozen. Incredible. Well, I guess maybe I'll go out and do the yard after all. I was all excited to get back in and see what was up, but this is just, first of all, there's no range requirement. This is completely ridiculous. This is diddling in the middle. There's no signal. Well, there is a signal. There's been an A. There has not been a B. There's been an A. Wait a minute. These things are working backwards here. I don't know whether bookmap is corrupting. I mean, IRD is corrupting something, but these B signals are for the pullback zone. These are, oh yeah, that would be correct. That would be correct. I'm sorry. A, B, and we don't have a trigger for the pullback. This is the pullback zone. So this is the IB low. I always get, I hadn't looked. So this is a long off the IB low, off the trigger down here. Here was a trigger. Here was a trigger, but there was not the B signal in place yet. So, okie dokie. I think I'll go out and get some fresh air, rest my eyes, work up a sweat, give the neighbor his pine needles back, and this is the thing to do on a day like this, you know? The best traders in the world all agree there is absolutely no requirement. Here's something that's important. Before I get down that road, this kind of fills in. We are raised as humans, I don't know about where you're from, but I was, with a work ethic. The concept that effort equals reward. You work 8 hours, an 8-hour day for an 8-hour pay. All those things. That's the opposite in trading. That is the opposite in trading. And where I have that somewhere. Anyway. Well, anyway. That's pretty weird. I'm sorry, but that's pretty weird. Anyway, you get the point. Trading is not based on any kind of a formula or relationship between effort and reward. I'm going to set this up as there we go. There's no relationship between effort and reward in trading. Now, absolutely, your effort, your homework, your study, your backtesting has a reward. Look at that. Guess what happened right there? Guess who said something? No news. There is random risk at its finest. What? Were you short? Did you just get clobbered? There is a classic example of random risk. What happened? Let's just see. And I don't have any news about it anywhere. So I can promise you that that's what happened. That's not any kind of market stuff. That is likely not a liquidity vacuum. That's random risk in action right there. Nothing over here at the moment yet. You can see the times here, so that's nothing happening. This has been kind of slow lately. It's kind of disappointing. Yeah, see, Trump's arriving in South Korea at 18:45 today, so he's airborne, I guess. Here we go, 12:31. Trump and China's President Xi are to discuss lowering China tariffs for a fentanyl crackdown. There you go. Funny, isn't it, that America doesn't believe that policing or controlling the inflow of drugs to America to be a responsibility of America? First, who said fentanyl is coming from China? Who said... I mean, it was invented and produced here by the Sackley family in Sock Up in America. So I don't know that, but there you go. There's the news, and there's the random risk in action. Fine. I mean, good. That's great. But that's okay. I'm not sure these two posts make any sense, do they? Okay. So basically we're going to cut the levies that we've put on Chinese imports because of some big thing that, some promise from Xi that they're going to do something about fentanyl. Okay. Good. That's a terrible thing, that drug. Never had anything to do with it. It's long before, after my time. But this opioid thing here, this fentanyl thing, this is the whole basis that the administration is using for all of these executive orders and controlling everything. They're using that under the federal, what the hell's the name of the act? There's a name for it. Federal something. Oh, I know what I'm doing wrong. Emergency something or another act. In other words, the president can usurp certain powers if there's a federal emergency. It's always been very, very closely monitored by Congress and the Supreme Court, and typically very short in duration. But that's executive powers. Emergency Powers Act, I think, is what it's actually called. Anyway, back to my story of remember that your reward in trading or your success is not based on how many trades you take. It's not, if you sit here and click the mouse for 8 hours, you're not going to get paid for 8 hours. You're probably going to lose your ass. Study. Prepared. Now, there's another saying that's very, very applicable here, and that is that luck is when hard work meets opportunity, or preparation meets opportunity. Clicking the mouse, stalking a trade, waiting for your setup to happen, and then taking it, that's one thing. Feeling that you need to sit in front of the market and trade all day long is another. Wow, look at there. Boop, 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 boop. That's a different story. And I think I'm going to, based on that, I think I will. I guess he got one tweet in before he took off. I don't know. I'm gonna head outside and get a little R&R, rest my eyes. I recommend you do the same. And I'll be back. I'll check back in every few minutes until I'm through with my lawn pine needle torture. Well, that took longer than I thought. Now what happened? Nothing. So we're going to do a similar exercise to yesterday, huh? Another freaking gap up and higher ground, all-time highs. Jesus. Really? Unbelievable. Well, I'm glad I was outside working, getting some physical work done. What happened over here? Nothing. So no signals, no trades. Right? You understand? There's an A, there's a B, there's no trigger. This would be a trigger for the long continuation, but it needs to be after the first A and B because this is not sequential as it is on their actual trading system. Oh, well. Okay, well, I hope everybody's enjoying themselves, watching, and being patient because I think I was saying this just as I went outside to do the work. Trading is not a situation where your work ethic means anything. You know, I don't know where you grew up. I have no idea, of course, or how old or how you were trained or raised or anything else. But typically, it's kind of understood by humans that effort equals reward to some degree, you know. Day's work for day's pay, you know, all those kind of old sayings. That's absolutely not the case in trading. So that's one of the things you need, one of the misbeliefs that need to be dispelled best you can. Well, hell, I thought I was only about an hour or so, and I guess it was 2.5, so I'm sorry about that, but I got it all done. So we had a hell of a storm come through here over the weekend, and I've been raking up all the pine needles and stuff off our lawn just now. The irony not being lost on me that our property doesn't have any pine trees, but, you know, that doesn't matter. Anyway, so here we are. We're moving up. If you're trading mean reversion or you have some vetted trade that works for you, congratulations. This is not anything that I could trade. So, and this ought to be scary. Look at the NQ. There we go. IRT was not scrolled out properly. Sometimes that'll happen. Okay, that makes sense. And here's the ES. And another freaking all-time high. Right up here at the expected moves. Not that this is meaningful at all. And it falls right in with the fact that we as humans are really prone to find patterns where they do not exist. Oh, look here, we bounced right off the trend line. That EMA is just holding the price. Well, yeah, it's calculated off a price. But anyway, yesterday we ended right on the daily expected move, and here we are up at the weekly expected move. Whether that means anything or not, these are some values. These are some levels that I picked up from the options world, and I'm just experimenting with them. I have no idea if I'm even calculating them exactly right and getting them in here. So do not pay any attention to these weekly moves or expected moves based on implied volatility 1 day out or 5 days out on the S&P, SPX. So that's how it goes. What I just so you know what I do and how I do it. I take the opening print of the overnight, the first print in the ETH session at night, whatever that open value is, which last night was 69.12, if I remember correctly. Yes. And you add to it the expected move for the 1 day, next day out, which gives you this value right here, and or 5 days out on Sunday night for the expected move weekly. That's how I do it. If anybody has a better idea that works better, I'm all ears. I don't know where I heard it. I think Anne-Marie, maybe, Tom Sosnoff. I'm not sure, one of the option-y kind of folks, and I'm not an options guy, so there you are. There you have it. Blue Boys on duty. I don't know what all this crap is. I get so tired of it. Hello? Hello? I have no idea who Just Alerts is. I'm fine. It's what? I'm sorry. Oh, I'm not interested. Thank you. Goodbye. Take me off the list, please. Well, you got my phone number from somewhere, so remove my phone number from your calling list, please. Thank you. I only answer that because it was, I very rarely have numbers ring here, and it was from right here in the same code as me, so I thought maybe it was. I'm going to have to figure out a way to filter these. I don't know about anybody else in the earshot here, but I get more frickin' spam calls and crap than you could shake a stick at, and text messages. But the problem I have is if you set up the new iPhones or the new system to only allow calls through that are in your contact list, if it's somebody that you care about that's not in your list, the doctor or whatever, how the hell are you going to know? I haven't figured that out yet, so I just usually don't answer them. But anyway, okay. So sorry for that. We're back to the 13:30 here. Got about an hour and a half till the cash close. Remember that the stream lasts from. I open the stream every morning, every trading day at 0800 Central Standard Time for the pre-market and analysis of overnight, set up all the indicators, levels, and all these statistics. I use no indicator, so that's pretty easy. I have Bookmap, which is what you're seeing here, and IRT, which is what's going on over here. What are we doing for volume? I'd say we're higher because we're at 848,000. Typically, it's about 1,000,001 at the close. We might be a little bit low. Let's check. What do you guess? Somebody make a bet. Here we go. 69,000, 69%. That's considerably lower than I expected. And the ATR range is at 1.25 points. In other words, it's 5 ticks. Think about that. What are they doing? Think about it in the bigger scale. Let's look at it maybe even easier in the trigger chart. Look at this. Look at these ATRs. These are 1-minute bars. What do you suppose is happening there? They're making the biggest blender full of retail trader soup you ever saw in your life. They're just all these boys and girls that can't restrain from clicking the button are getting ground up right, left, and center. Okay, if you, for whatever reason, you got along anywhere around here, good for you, and I'm real happy for you. I don't have any signal, as we've discussed several times. I'll go through the entire backtest system and explain it all and show you samples and stuff in a little while, as soon as I stop sweating and grab some water. Didn't miss anything, and I'm not upset. So I'm sorry for the stream, but let me just say again, this is a trading business, not a video game or gambling. I stream the entire cash session from 8 o'clock in the morning through the open at 8:30 to 1500 at night. Take no trades off the stream. It's completely transparent, completely accountable. I'm not going to take trades that aren't in my trade plan and in my setups, my structured, vetted trades. I'm not going to do that just because I want to my goal here is not to make money. I mean, sure, It would be wonderful if I had 1 million YouTube subscribers and got a bunch of money from YouTube also. But that's not my goal. This is my virtual journal. And if someone can learn from that or thinks it's funny to watch, whatever, if it's helpful or meaningful in any way, that's super too. But this is my virtual journal for me and my trading. And hopefully, there's a lot of pearls of wisdom here, or pearls in the garbage, if you want to call it, to take away from this. I've been doing this a while, and I have an approach that you will discover is the approach followed by all of the most successful traders in the world. And that's no exaggeration. So let me grab some water and we'll go through that in a bit. Phew. All right. I can't believe it. Another freaking all-time high. They're going to get it to 7,000 whether anybody wants them to stop or not, I guess. Obviously, you can see we didn't have any random risk show up. There it was. Or if you want to look at, there it was. We're going to have a great deal with China. And up we go. I certainly hope we do. But let me point out to you that this was I Hate China. And that was 2 Fridays ago. So I'd say inconsistency might be the watchword here. Maybe, I don't know. But yeah, we don't have any, we've got no random risk and they're just grinding it up. I have nothing to say. I don't know. Alan Greenspan would call it irrational exuberance. I will say something that here's a fact that I mentioned earlier. Looking back at the last 8 or 9 government shutdowns, the S&Ps have traded higher each and every time, up and to the right. In other words, whether you're working or not is meaningless to us. We're going up here, and then there's earnings, which have been good. And big earnings tomorrow. Alphabet, Whoever else I forgot. Let's look. Boop. So this is the big earnings deal, and yeah, we've got the world famous most important report for recent memory is the Fed interest decision at 1300 yesterday, and then we have the earnings, which is Microsoft, Alphabet, Cat, Amazon is the next day. Wow. Oh, next week. Sorry. This week, I'm sorry. Visa, Amazon, Alphabet, Cat, Apple, Amazon. Big week. No random nonsense. That's good. That's very good. And yeah. Okay. I swear to God, I thought the data was stuck. I thought the data was not moving. This hasn't moved anywhere. I went out to the kitchen, filled my green tea glass, and came back, and it's still exactly where it was. Man, oh man. All right, well, these days are getting kind of frustrating. You know what I mean? All right, so a good time to talk about trading as a statistical, consistently profitable business based on probabilities rather than a video game or gambling. The first thing you need to understand about trading is we are operating in a random environment. There are millions of traders and inputs to the market continually through the day, through the session. And if you imagine that there's going to be some consensus among all of those, you're wrong, and the session can go any which way it wants. That's a fact. The next thing is, it's also a statistical fact that the outcome of the very next trade is random, 50-50. And that is a fact. And here's an old saying you've heard a million times and didn't realize that it was a statistical, very important statistical statement, not legal one, but past performance is not indicative of future results. That's really important. What does that mean? That means that none of this has anything to do with which way this is going to tick right now. This is 50-50. This is like a coin flip. All right? Now, once you've recognized that, what are you going to do? How are you going to approach this as a trading business? Well, you're going to recognize or identify a setup and the parameters that validate an entry on that setup. In my case, I've chosen the initial balance trades, of which there are two I've explained already. There's the IB continuation and there's the IB failure. I chose them because the IB failure is essentially a mean reversion trade, outside in, and the IB continuation trade is basically for a directional market. So you have a vetted, once you're done with the vetting process, you have a vetted trade for both day types. Okay, after you've done that, you've selected it, then you need to capture a statistically significant data set or sample set of those setups with that specific criteria, whatever you've decided that to be. In my case, as I've explained a whole bunch of different times, on the initial balance setup, the homework, which we'll go through in a little bit, but let's just look over here. These trades, the IB continuation, there's the IB. The IB continuation would be this. The IB failure would be, the IB continuation would be this. And the IB failure would be this. Okay, mean reversion to the mean right there, or continuation. So there's basically very specific rules, A, B, and trigger, that validate being able to take that trade. If I don't have those, I can't take the trade. It's not in the data set, okay? And I can, using the backtest method here in IRT, I can go back. I typically review 500 trading days in the backtesting. You can do much more than that, however much data you can download. All right, so there's that. Now, you have to be really careful that your data set is outside random possibility, a random possibility, a random probability, random distribution. What does that mean? Flip a coin. Everybody in the world knows that a coin, pretty much I guess, everybody knows that a coin is 50-50. Flip a coin 10 times. Would you be surprised to get more heads or more tails than the other one in 10 flips? No, you wouldn't. Of course not. Nobody would. Flip it 1,000 times, pretty close to 50-50. The more instances or samples of that occurrences of that data set or that sample type, the closer you will become to 50-50. So you need to get outside that random distribution area as best you can. Minimum of 100, probably 500 or 1,000 trades is much better. Okay. After you've done that, you can then backtest, determine what the edge, the expectancy, and every time that trade and setup presents itself, you rely on the law of large numbers to compound the profit or the expectancy to your bank account. That's, not my epiphany here. That is the best traders and educators in the world. Thorpe, Tudor Jones, Simmons, Jim Simmons, Ray Dalio, Tom Sosnoff, Tom the Trader, Tom B, Rod, pick one, Mark Douglas, any Bernstein, whatever, Brinkelstein or whatever that guy's name is, who's a new kind of expert around YouTube that is a verified 8-figure trader. I don't know much about him. I think he traded with SMB actually, but anyway, he seems to be pretty screwed on, or has his head pretty well screwed on. Any of them, listen to any of them that's successful or knows what they're talking about from a professional trading point of view, and they're going to talk about statistics, probabilities, the law of large numbers, and that's the key. What you want to do then is when you have identified that your setup has a positive expectancy, every time it manifests itself in the live markets, you take it. You can know that you're going to have a string of losers in a row. You know that you're going to have a win rate and a loss rate, and you're going to watch for that expectancy to compound to your account. And if that sounds at all familiar to something else you might have heard about, it's called the gaming industry from the point of view of a casino. That's exactly the business model. They play no game on the casino floor, which they have not pre-identified to have a positive edge or expectancy. And when they when they put it out, on the floor, their only mission in life is to play the game as many times as they can in 24 hours. They know they're going to win. They know gamblers will win. They know they could have winning weekends or losing weekends. They know gamblers are going to win the hand. The pit boss doesn't freak out, shoot the dealer, and change all the rules. They just deal the next hand because they know the expectancy its probabilities, its statistics. It's not luck or gambling or hunch or stars, or if the chick with the big boobs stands on your left or whatever, none of that crap. So that's why I approach trading this way. That's why I'm so, such a stickler about backtesting and following the rules. There you have it. Wait a minute, what is going on? Another pretty important thing to remember here is that along the same line, what keeping this chapter thing is driving me crazy. Wait a minute, what am I doing here? Okay, I guess I got it. Another thing that's important to remember when you're doing statistics, and especially when you're, doom surfing or whatever it is you're doing on the internet, win rate of and by itself is complete BS clickbait. It's meaningless. It's clickbait only. They want to sell you something, and they make their money from you subscribing or buying something from them on the YouTube or the internet, not from trading. Win rate is a component in the formula for calculating expectancy, very definitely. But win rate of and by itself is useless when you don't take it in consideration or in conjunction with your R factor, or your win rate, or your risk reward ratio, whatever word you want to call that. That's what really makes the difference. Your expectancy is a real simple formula: win rate times the average winners minus the loss rate times the average loser. And again, that needs to be over a large enough data set that it is meaningful, statistically significant, not just, 6 trades or 2 trades. It needs to be over a large data set. That's the next question you need to ask that Mr. Win Rate guy. Over how many trades? You can have a 95% win rate and go broke in 10 trades. You can have a 30% win rate, have a 3-to-1 risk-reward ratio, and make money. I'm sorry. I always say that backwards. For some reason, I always say risk-to-reward ratio. That's 1-to-3, not 3-to-1. You want to have 1 R value, 1 risk unit, to 3 risk units of reward. That's the key. And that's how you come up with expectancy. There you go. Another thing that's also important to know about these people that talk on the internet and whatever else, these trading experts, futures is a zero-sum game. There is absolutely never, it's impossible to have more sellers than buyers or more buyers than sellers. Think about it for a minute. If you trade futures and are familiar, it's called a contract. That means that there's a contract between a buyer and a seller. There cannot ever be more buyers than sellers or vice versa. If you hear some guy say that, you know right away that this is just talking out his ass, because his mouth probably knows better. The way the market goes down, aggressive sellers cross the inside market and hit the bid. Down it goes. Market goes up because aggressive buyers cross the inside market and lift the ask. This is resting liquidity, passive. That's how the futures market works. And if anybody tells it different, they don't know what they're talking about. And it's a zero-sum game. Because of that, it's a zero-sum game. Think about it for a minute. Every time somebody bought to get higher, somebody sold it to them. Somebody's got the other side of that contract. So all of these contracts that have been bought up to here, somebody's holding all of that short inventory. And how do you suppose that person is going to make their money back? By taking the market down. The market goes down to go up and goes up to go down. What do you imagine is going to happen out here pretty quick? What happened here? The market goes up to go down, goes up to go down, goes up to... What's going to happen? It is the nature of the market. And the sooner you understand that and get on the right side of it and realize that, the better off you'll be, I believe. So there is all of that. Consolidate some of this stuff here. All right, let's take a look at the back testing there, Bob Louie. The way the back testing works, the way I do it, okay, is real simple. Like everything I try to do. This is the back testing chart, what looks pretty familiar to the trigger chart, right? This is the object manager, and there, this is my trading system for initial balance trades. And there are the rules. Now, what the system does when it backtests, it evaluates each one of these rules over every bar, depending on what time frame you use, and I'm using 1 minute. So if I go back 500 days and backtest, the system will evaluate every one of these rules over every 1 minute candle, over every trading day for 500 days, or whichever session I choose. Now you can imagine that if you tried to do that manually, you'd be older than Methuselah before you got halfway done, and it would probably be a screaming mess, and a bunch of errors. It would be if I did it. So the way this works that is really handy is, let's just do a back test here and let's look at 50 days quickly. ES, 2 contracts. Don't have any for the sake of explanation here, I don't have any commissions built in, which I can certainly do, and I do for my stuff. Index futures, this is the RTH session, 8:30 in the morning to 1600 Central Standard Time. These are the reports I want. Okay. How long do you think this is going to take to backtest every 1 minute candle for the last 50 trading days? Keep your guess in your head. You ready? Well, it took a second. Computers are pretty wonderful, aren't they? There's the profit. It took 81 trades, 38 long, 43 short. Come on. Required capital, best day, worst day, max drawdown. Miscellaneous stuff is how this would have performed in a buy and hold. 20 21 winning days, 8 losing days. All right, this is more meaningful data to me here now. This is the actual trades. There's 28 winners, 21 losers, 81 total trades. There were 7 consecutive winners in a row, and there were 4 consecutive losers in a row. Remember when I said that when you're establishing your stop for the risk-neutral trading package, you need to, the first thing you need to evaluate is your account risk parameters. Can your account, now each losing trade on a 2 lot is $300 with the setup that we have, you know, three point stop, etc. So each one is $300. So can your account stand $1,200 loss drawdown? I'm not saying it can't. I'm just saying you need to evaluate that. Now, what I've done also here now is I've created this little guy. So I'm looking back at 50 days, 81 trades, 28, 21, 26. There we go. Here's the statistics. There's 33 scratches, win rate of 54.27, loss rate 25, expectancy is 224, profit factor is 133, trades per day is 1.6. This is really important. It's a 2 contract position, so a total positions of 164. I can rely on achieving T1 57.32 times, a percent of the days, or 94%, over half, 57%. I can rely on, or should count on, achieving T2, which means a full profit up here, total win, 17% of the time, and I should expect 42 stops, 25%. That's backtest. And if you want to get even more into the weeds, here's every trade from the first day, and the time, and the entry type, and the exit type, and the profit resultant. You can go back and look at every trade if you want to. All of them. And you can do that for 500 trades or whatever you want to do. Now, that's the way to backtest it. And there's other steps where you can optimize, you can backtest, optimize the backtested strategy, and then forward test with the optimized strategy. That's the correct way to do it. That's be my next steps this weekend. And now all of a sudden, this is pushed over here to the chart. I'm not sure I like that much, but you can see that we had no tested entries here yesterday or today. Day before yesterday we had 2. And the way that works then is it's now plotting on the chart, right? So let's look here. Come on. Ooh, what's going on? This thing doesn't like all these quick mouse movements here. All right. So here is 48 ticks. This is a full 2-point winner. There's the A. There's the B. There's the trigger. And there is the continuation trade to 2 targets.
So that's how it would plot over here. Now, in case you've noticed, IRT, this indicator here, was built by Chad long ago, and it only doesn't work on multiple exits, which I've been able to use the identifier for by part of the setup. So this is where we achieve T1, and there's the price level for T1, and this is where we achieve T2, and there's the price level for T2. But I can't get into the back of it and get it to calculate 60 points. This should be 60 ticks, not 48. 48 is only the amount of ticks for the second, or for the T2 target. It doesn't add T1 and T2 together or multiple, and I don't care. I mean, that's, the least of my worries. When I'm doing a real back test, I'm using the data that I just showed you on those sheets. So that's where that data comes from, and that's where you can really hang your hat. This is just visual confirmation. Did it enter when I wanted it to? Did it enter on the trigger? Was there an A and a B? Yeah. So there you go. Now, I believe that's the way to do it, and that's the way to run a business of statistics and probabilities, and also it's the way to now I'm not expecting to have any trade happen. Besides, I've already got an end of day rule which would close me out of any open trade at 14:30, so I'm not going to do that. What I am going to do is take that indicator or that session off of here. And, no, don't be that way. I'm going to remove the trading session system from this chart, because I don't want it to be there unless I mean for it to be there. So that's how I backtest. You see, I think it's, and now I will move on to the next one. I will choose the next setup and the next rules, and there we go. This was kind of a milestone for me because I was able to completely work out multiple entries. Multiple exits on a single entry. In other words, T1, T2, however many T's you want to go, and sequential rules. So I believe that I've got a real firm grip now on how to change this for the next setup. And I only plan to vet 2 or 3, maybe 3 at the most, but probably just 2 setups. You can if you focus on that, you can make a good living. You don't have to be trading like I said earlier, you don't have to be trading all over the place. And there's no rule that says there's no equation between reward equaling effort. And here we go for another all-time high. Jumping Jesus. Wow. Who knows what? I assume that's based on some news or something. Let's look. Somebody probably babbled something. Oh, yeah, well, here we go. Yeah. I guess that was it. I don't know. So there you are. And we're going to round the curve in about 3 minutes. I'll do the daily recap. And then we will get this hootenanny off to the shower, and I'll put on my soccer dad hat and switch modes. I don't know why my voice gets weird after the day. I guess talking too much, I guess. Not drinking enough tea, or I don't know what. Sounds weird to me anyway.
Is it only me, or don't we all remember that less than a month ago, there was a big, well, let's start over. 2 months ago, big tariffs and block all shipments of technology, especially the latest H20 chip or whatever it's called from NVIDIA to China. For national security reasons and to keep America ahead of China, and assuming that we are ahead of them, I don't know. Then about a month ago, well, we're going to license NVIDIA to sell those chips to China, and a portion of the money will come to the government for the licenses. Here's an interesting thing about that. All of a sudden, the national security wasn't even an issue. It was about money, which seems to be a pretty big focus point for this administration. And they assumed the astronomical amount of the license fee to be upwards to $2 billion a year. Here's the part that you don't understand, here's the part that nobody mentions. The United States debt is $18 billion a day. $2 billion potentially jeopardizing the American security was about 2 hours worth of budget or of deficit for one day in a year. To me, that is just ludicrous, I think. But nobody ever says that. And now you see what's going on now. They're not going to send. They assume the China market to remain zero for NVIDIA, and they're not. They don't plan to send any Blackwells. Wow, it's crazy. I guess it's not as dumb as putting a tariff on islands that are a 3-week boat ride from Australia to Antarctica and inhabited only by penguins, but we did that too, in the Rose Garden there. Christopher Island or whatever it's called. A 3-week boat ride from Australia to Antarctica, to the coast of Antarctica. And the only thing there is penguins and ice. Man. It makes you wonder, doesn't it? Makes you wonder. Anyway, I'm not political. It's just, really, if I did my life that way, or the neighborhood guy did his life that way, how long would you last? I don't know. There's a disconnect somewhere, I think. So we've turned the corner. We're in the final throes now. So let's look at the world famous. Where's Blue Boy? Come on, get out there, you coward. Basically the same story as yesterday. Flat, around 2, up we go. All-time highs. Again, it's about the 3rd time I've moved this today, which is completely ridiculous, but there you go. I should have kept my 401k in place. It's gone up about 100 points since I closed it out and turned it into an IRA. I just didn't have any faith in what they were going to do. Anyway, that's neither here nor there, but, live and learn. So let's start from the beginning. Tomorrow. This is investing.com. It's my news source. Here were our news reports today. Here we will have tomorrow.
And if you are not aware of the fact that this is going to happen at 1300, you are living under a rock. This is the most important events of the month, without a doubt, so far. This is the famous Fed rate decision. Also, we have a bunch of earnings, as I pointed out earlier. Microsoft, the Googles, you know, the two alphabets, Boeing, Verizon, and then the day after that is Amazon and somebody, I forgot. Apple and Amazon, there you go. I think I saw a note. 5 of the Mag 7 are reporting earnings this week. That's a pretty big deal. So, yeah. Investing.com. I like this presentation of the reports for screen snapping and putting in places in Discord or whatever. Free. You can set it up, filter it for your time zone and whatever you want to do. Country, reports, 2 stars, 5 stars, 3 stars, whatever. And the second news source that I use is Financial Juice, which has a similar calendar feature, but I don't like it as well, on the left. And then the right is more of a squawk box. This is where we'll pick up the market on close imbalance at 1450. And you can get all of this stuff and read as much as you want. Yeah, so there we go. Investing RT. We already went through the back testing and the trigger chart, and the fact that we have had no signals today for the trades that we are stocking or that we're working, and therefore there's no trade. Yesterday or today, 71%. So remember, last time we looked at this, the volume jumped up from 64% to 71%. And the average true range went from $1.25 up to 2 candles per 1 minute candle. These are average rotations. And if somebody knows how to trade these or use them as signals, please let me know. I can't figure it out. I don't spend any time thinking about it, I'll admit, but yeah. Anyway, there's that. We know that we have, in today's statistics, we opened higher out of range for the second day. Every one of these levels, which is highlighted in blue, means that that level, this statistic, has been attained in this RTH session. Every one of them. Those in gray, no. Those that remain gray were not revisited by price. And this is where we get the statistics for Bookmap every morning in the pre-market in this study, and this is the TLab snap. The chart might be interesting to you. I don't know. Got every level you ever imagined going on, all the numbers, several sessions back. And our old favorite, the higher time frame chart, my higher time frame chart, which is, I refer to it as a micro composite, day session only. Wherever price overlaps, I draw a volume profile around them so that I get a high and low volume nodes, which push automatically to Bookmap. Get a micro composite VPOC, obviously all-time high, and now it's clear to hell up here. Jesus. And the session prices here, which ought to also push automatically to bookmap. Market profile. NASDAQ should be obvious. NQ, right? Yes, these are the minis. I plot, if anybody's interested, the micros. Okay. That brings us to our world famous bookmap. This is the dome, of course, the price ladder or the order book or whatever you want to call it. This is my micro composite column levels, which I put in here manually. You know, new all-time high that's moved about 4 times today, I think. And the gap high, never looked at the gap low. Did we? Yeah, we did take that out. Okay, so here's my workflow for that. Just glad I noticed that. What I do for these levels which are stale, that have been revisited, is to change the text to black. And then tonight or this weekend, whenever I remember, I remove them from the column. Now I know that they've been done. And here's the all-time high in the RTH from the 19th. So that doesn't matter anymore. Here we are up here. This is the volume profile from the full session, which started at 1700 last night. We'll end at 1600 today and pick back up at 1700 this evening. This is the RTH session volume profile, which reset at 8:30 this morning. This is my notes column, which I spend a lot of time talking about in the pre-market, but the first thing I do every day is change the title to the open type for the day that we determined in the pre-market. I show you how to do that. Then we enter all the statistics for the day, upcoming day, from the study. And these are the flags of the migrating volume profile. And these are the session prices from IRT. And there's a problem with value area high and low, which I got to figure out. That'll be my mission for the evening, I guess. And the price ladder, the heat map and book map. At about 9 minutes till the market on close and balance orders. And there's no indicator on my book map or my IRT. And all of the price levels and price itself and reference lines or levels are just data driven. Price data driven, right? POC. Price at which the most contracts have traded so far in the session. It's just a marker. The yellow line simply plots where the price has been. RTH or Globex VWAP, RTH VWAP, volume weighted average price. RTH mid. I've talked about the IB high and low a lot, but it's confusing to some people. It's just it stands for initial balance, high or low, but in reality, these two levels do nothing more than mark the high and low of the first 1 hour of the RTH trading session, period. That's all she wrote, boys and girls, and here's the blue boy. Very high, very valuable secret indicator. It's called a vertical line. I just put that on the opening price, the opening print, so I can make sure it's a visual reference for me to make sure I've got the whole session in view. And that's exactly it. We'll now stand by till we get that market on close. Thanks a lot for coming by, stopping in. Smack a thumbs up. I'm not monetized for this in any way. Other than likes and subs. I'm sorry that I think I had it on the wrong window. So this is the dome, the micro composite column. High and low volume nodes, full session volume profile, RTH. The notes column with the statistics and the session prices. POC, VWAPs, mid. IB high, IB low. Boop, that's it. And this little gray, shadings here in the heat map are just reflections of or graphic representations of the resting liquidity in the book. Really pretty simple. These levels, except for the continuation and pullback levels, which are from my trigger chart that I showed you that earlier. All these other levels are just a graphic, just another way of showing the exact same data as the levels are here in the cloud notes. Same data pushed from IRT. That's that. I'm kind of tired of these days with no signals firing though. This is getting kind of boring. And I'm sure it's not good TV, you know, or whatever you call it. What we're doing here. But this is trading as a business. This is not trading as a video game. And I don't know why. Huh. Seems like one hell of a delay with Bookmap. I'm not sure why. I mean, with YouTube, I don't know what's up. Oh, this is way off. This is frozen a long time ago. I didn't even notice that, but by looking at the clock down here in the bottom of the stream, that clock says 13:42 on my stream. I don't know. Well, there you go. I don't know what the hell happened there, but if somebody tried to get a hold of me for something, or if now it's up to date, I don't know whether your side froze or just mine or what the hell happened there. It's current now, and it's working, so. Well, that was hardly any delay there. Beat the hell out of me. Just, you know, fun. Okay, so 3.5 minutes and we'll have this always something. I'm more perplexed about this value where that stuff has worked for 2 years or more. All of a sudden it isn't right. And it's only the value area high and low. It is not anything else. The rest are spot on. The IB highs and lows, and because I can check them against session prices over here. Beats the hell out of me. These are all the session prices. I got no idea. I mean, I'll figure it out, but irritating. So we got about 1.5 minutes to the market on close and balance. Whether that means anything to you or not, it doesn't have much meaning to me. And I really appreciate you coming by. Would love participation. It's usually just Richard and Antonio, and sometimes Alex and one or two others, but yeah, drop something in the chat, thumbs up, like. Go over the trading and the back testing and the system every day, starting at 08:30 in the 0800 in the morning for the pre-market. Yeah, you are very welcome. It's nice to trading can be a lonely business, right? And especially when you're trading as I do, which is as a business, not kill like I'm killing snakes. So I spend a lot of days just analyzing and waiting, which is what I've done today, as you're probably fully aware. And there's the day. No signal. Nor was any signal yesterday. Okay, about 10 seconds or something. Let's see what we get. Well, not a lot of movement on the exact price here. A little bit of a down pull. That's a little bit more of a normal reaction to those market on close orders. That's kind of nice. There for a while, you didn't even know it. It was a whole bunch of nothing. Not that that's a big deal, but it's a little bit of a reaction. That's kind of nice. Reassuring that the market's still alive and well. We'll get a thing over here as soon as they're through with their adoration for Jason Hong. Whatever his name is. I think it's Jason. And there they are, market on close imbalance. Sell side, 915 million shares of the S&P 500. NASDAQ is sell side 328 million. Dow is 410 million sell side. And the Mag 7 is 142 million sell side. So there we go. Now you know. No matter what I said all day long, if you're trading, make sure you've got your spider senses wound up at 1300 tomorrow Central Standard Time. That's going to be the Fed rate decision and the Powell news press briefing or whatever you call it. Do not be in a trade then unless you think you've got it figured out. That's the difference between this is the difference between recognized risk, which we can plan and mitigate for, right there, and this, which is a random fake news, maybe not fake news, certainly not based in fact with any kind of evidence, tweet at 10 o'clock in the morning from out of no place. And it's just one of many, but it's a great example and it's recent, so that's easy for me to do. That's the difference. It's not political. I could care less. In a trading, context. But this is why you want to make sure you understand your prime directive as a trader is to protect and maintain, grow your account. And the way to do that, especially in this environment, is risk management. And the way to do risk management in this environment is to minimize your account's exposure to market risk. Imagine if you had gotten long, boom, 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 and you're getting long here, and that happens. And you don't have stops, you don't have brackets in the market. That could be a real account losing kind of day. So there you go. Also remember, You are the most critical piece of equipment you've got in your trading office. Take care of it. At least once a day or twice or every hour or two, get out in the natural light and let your eyes soft focus. When you spend day in all these hours, as we do, in front of the screens, focusing on these screens, your short focus eye muscles are in constant contraction. You need to get outside, focus down the street, the good-looking neighbor gal next door, whatever the hell you're going to look at that makes you relax and feel good. And that relaxes your eye muscles, and, natural light, maybe a little sunlight, a little UV, not bright, or, don't stare at the sun, but that is all good for your body and your eyes. Exercise. Be well hydrated. Get good rest. And be back here at 8 o'clock in the morning. That's an order. That's an order from headquarters. Now we're going to have this baby wrapped up and put to bed in about another 5 minutes. So there you go. Now I don't know whether they're going to pull well, they didn't really. Yesterday they pulled a rabbit out of their hat in his last 10 or 15 minutes, so they didn't this time. Now what the hell has happened? Linsoft is having a problem. We got some delays there in IRT for whatever reason. I don't think it's a lot of volume coming through. You can see whether there's a high volume spike down here with, what's this R+? What's that for, I wonder? The ingestion, if it starts getting too high, you start getting yellow and then red bars down here. I don't know what that R+ is about, to be honest with you. That would be interesting to find out. And yeah, 4 minutes. And I'm, metamorphosed into soccer dad. Not really, but I do. I'm the designated driver here in the family, so I take my daughter to school and do all the driving. Simply out of their desire. My wife has her driver's license and stuff. She's just not interested. She doesn't like the traffic here, spooks her. My daughter could care less. She just turned 18 too. Could care less about driving. Imagine that, huh? I got my driving. This is a true story. I grew up on a ranch in Montana, and I'm an old guy. Because I grew up on a ranch and we needed to go to town for high school, ranch kids got their driver's license at 13. And I had a car since I was 13 and a half. Crazy. Driving, 10 miles on country roads in the wintertime. Different world, eh? Okay, 2.5 minutes. Yay, 2.5. Mm-mm. 2 minutes. The 2-minute warning. Play football. I don't know whether they even still do that or not. It's been a long time since I did. Well, I'm sorry for the boring content, kind of, without trades, but that's the reality of professional trading as a business. And, when you apply that to vetted trades with probabilities. once you have more than one or two vetted trades, then you might be able to do, for example, mean reversion. It only gives you one possibility, right? It only gives you a possible trade in a mean reversion or a balanced environment, not in a directional one. That's why I picked the IB trades first. But, you know, there's a million different ways people, just guys I know and trade with, use, you know, the V reversal, the mid VWAP migration is a big one, and there's lots of them. And we're going to be done with this mess in 30 seconds, boys and girls. Get outside or whatever. Do something. Take care of yourself. Be good to your family. Be good to yourself. Be back here at 8 o'clock in the morning Central Standard Time. And most importantly, approach trading as a business. Look into it. You know, if you don't believe me, that's fine. Get on YouTube and Google Mark Douglas, Jim Simmons, Tom Sosnoff, anybody, and listen to what they have to say, and you're going to hear about probability and statistics. And it's not boring. It's, you know, or better yet, Google the gaming theory or gaming business from the point of view of a casino and see how they do it. You'll discover it's exactly the same. And that is the end of it. Yay! I think that's the clap and cheer. Maybe it's a fart sound. I don't know. There we go. So we had the last minute little VPOC migration shift up like usual. And I'll throw that in there for the hell of it. Oh, it'll just come back to where it was. Okay. All right. So have a great night. I'm going to get to the bottom of this value area high and low thing. That's driving me nuts. And then I got to do the family stuff. So have a great night. Take care of yourself. You know, every hour or so, take a walk around the house, do some push-ups, do some pull-ups. I don't know where, I have no, of course, no idea what your trading setup or where you are, your office, but mine, fortunately, I have 2 stand-up desks and a large enough space that I can just get back. I can still watch the screens and do squats. I've got some dumbbells in there. I can do curls, flies, get a cheap chin-up bar for the doorway. You know what I mean? You don't have to be. Nobody said you had to go to the gym. You can just get on the floor and do the plank, do some push-ups, whatever. All of that makes your blood circulation and your health and your brain, i.e. you make better trade decisions. Real important. Have a good night. See you tomorrow, 8 o'clock. Be there, be square.